You wonder whether or not we need to create now Europe, an Airbus for Europe in terms of the defence space. That's an interesting way of looking at that narrative. Let's talk about what is happening with this European Open. Here we go. We're going to get some numbers. BAE Systems could be the standout story in the FTSE 100. It opens just in positive territory, expected to climb from here. We're expecting many of these markets to be open up kind of, let's call it circa 0.5%, but we'll see where the rest of the session takes us. Remember, we've got US manufacturing ISM data coming out a little bit later on. That's a key number to watch out for too. So the Stoxx 600 is up as well. We'll see how long it takes Germany to open this morning. We'll see how long it takes the French market to open. We need to get an idea of how some of these single defense stocks are trading this morning. There's other factors going on around it, but that story, that geopolitical story, absolutely front and center this morning, Lizzie.
Yeah, so we are waiting for the likes of Rheinmetall, Leonardo to open. We have got Safran shares up 2.7%, Airbus 1.5%, Indra Sistemas up 3.9%. And as we continue to wait for some of the CAC and the DAX, just at the moment, the sector breakdown is about half in positive territory, utilities in the lead and tech at the bottom of the basket.
Yeah, see, Rolls-Royce has opened up by 4%. I think not quite as aggressive moves to the upside then as perhaps some of the suggestions an hour ago or so that we were seeing coming across from TradeGate, but that's what we see right now. We're waiting for some of those big names, as you point out, in the energy space to open up. And in terms of the other trends that we're seeing from a sector perspective, then energy is the best performing sector this morning.
Just a quick note in terms of luxury, because of course we did have the scoop on Prada looking to buy Versace. We'd already seen those shares higher 4% in Hong Kong. You are seeing red on the screen for the likes of LVMH and Kering. Does that new addition to Prada help to compete with those big luxury names?
I would be surprised if they were trading down on that. They're such heavyweights. There's a kind of index angle maybe to some of this as well. You have seen potentially some of that feeding through into the market over the last few days. If you're buying defense, is there a portfolio effect here? If you're going to buy European defense,
get rid of luxury.
What are you selling? Kind of what's the other side of that trade? I think maybe is what we need to think about in terms of the narrative here. We still don't have a trade on the DAX. Be interesting to see exactly how much the DAX is going to open up this morning and which are the key stocks that we're going to be watching out for. I'm just going to scroll down and see which ones we're still waiting for. Rheinmetall has yet to open, but as we've already indicated, that stock has been up really very, very sharply since the start of the year already. Elsewhere, some of the industrial names are up. Siemens Energy, Commerzbank, Daimler on the upside. But Ollie, who joins us again around the table, Ollie Crook, waiting for Rheinmetall.
Yeah, listen, we're going to wait for this to open up this morning. I mean, listen, I think we were all a bit surprised when we were looking at the desk of the TradeGate pricing for the defense story in Europe, where we're seeing double-digit calls to the upside after what we can say is probably we would have thought has already been priced into the system. I think that what is interesting about this is that trying to find, we're getting the opening price now in Rheinmetall. I'll just pull that up now if we've got it. So up 13%. Yeah. So again, when we're talking about, you know, kind of the defense military buildup, potentially after what we saw on Friday, there's some real credibility to all the words we've been hearing for the last few months, where now the market is really beginning to price in. We're hitting almost 15% now on Rheinmetall. Really, I think the bellwether of sort of European military build-out really does, you know, a company that does really a great deal in that space. But again, it shows to show that there is still legs to go. The question is, how are you going to actually finance this stuff? What are the actual mechanisms going to be? And that is going to be what's going to be thrashed out over the next couple of days. And certainly in Brussels, you need to come up with something because the rhetoric is not going to buy the bullets.
Right, yeah. So we have Rheinmetall up, as you say, 14%. Saab now up by 11%. 0.5%. Rolls-Royce, as we mentioned, up by just over 3%. You were taking sounding into the weekend, Ollie. We've had a lot of conversations during the weekend, of course, about where the defence story for Europe goes. Take us to the Norwegian angle here.
Yeah, so listen, I spoke to the Norwegian Prime Minister a few hours before that meeting in the Oval Office and got on a plane. By the time we landed, all of this stuff had happened and just trying to get our head around the story of, basically what had happened in the Oval Office. But what's interesting is Norway is, of course, not part of the EU, but they want to start to build closer ties with the Europeans in terms of coordinated defense procurement. He was very open to this idea. But what I thought was interesting is also this sort of idea of the coalition of the willing. This is not just about putting troops on the ground in Ukraine. This is, of course, one component potentially in terms of the security guarantees. But it's what is this new sort of architecture if the NATO of the past is not what we sort of anticipated to be? And this is something that's going to involve, obviously, Norway with this massive sovereign wealth fund could be a large component of. But, of course, Turkey. We're talking about the largest standing army within Europe. This is an absolutely huge sort of part of this. So have a listen to what he had to say to us on Friday.
Europe cannot complain its way to the negotiating table. It has to argue its case on substance and on process. And it would be easier if Europe spoke more with one voice. And Europe on Ukraine is not only EU. It is EU, it is UK, it is Norway, it's also Turkey.
So trying to develop this new architecture. What I think is interesting, though, I did press him on, is it time to start withdrawing some money from the Sovereign Wealth Fund to start funding European defense? He said, no, we're not really ready to go there. Is it time to commit troops to the peacekeeping operation in Ukraine? He said, no, we're not quite ready to go there. Is it time to think of the Sovereign Wealth Fund not just as something that needs to net the highest return, but as potentially a geostrategic tool to try to build out the European defense ecosystem? He said, no, we're not ready for that yet. The question is, with these Europeans, will they start to begin to think outside of the box and really challenge themselves? And that, I think, is a big question for Friedrich Merz, who's about to become Chancellor of Germany.
Okay, Bloomberg's Oliver Crook, we thank you. As we see the DAX higher 0.7%, the CAC open 0.3%. We can get more analysis now with Kareem Shadid, head of EMEA Investment Strategy at BlackRock. He joins us around the table now. Kareem, we were just talking to Ollie about the European defence spending, the rise in the likes of Rheinmetall and Saab, double-digit growth this morning. Do you think that the picture is really that different from Friday to justify this sort of a jump?
I mean, I think the story in Europe has been building for the past couple of months. Like, we just closed February, and we've seen a second month of European equity outperformance. And what I would point to, actually, is a poll that we did on a call with our clients across Europe. 405 clients answered that poll across Europe of what do you think are the biggest drivers of European equities right now? And 50% said geopolitical developments, 30% said valuations, and only 20% said macro or micro developments. So to me, the story right now is a European equity rally that is reflecting a reduction in risk premium priced in by the market on geopolitics as one component, as well as sort of the early innings of macro as a second. But it's still not a fundamental rally yet. Maybe that's leg two.
So then we look ahead to Thursday, and you've got two massive events, the ECB meeting and this EU special summit on military aid for Ukraine. Seems obvious. Which is more market moving?
Well, it's a great question. I do think the rate divergence, the central bank divergence of the ECB and the Fed is one that we have been talking about from the get-go, from the start of this year, as sort of an important macro theme that investors need to contend with this year. And so I do think the ECB meeting does present a tailwind. We do expect a rate cut. The inflation figures end of last week, to your point of what's changed between Friday and Monday, we had a few single country inflation figures on Friday that did point to weak further drops in inflation. We're expecting the composite number today to point to this, which should provide enough support for sort of continued rate cuts, which is one of the tailwinds for European stocks.
Are European equities decoupling from American equities? If US equities went down 10%, I keep asking this question, would European equities go down 5% or 15%? I still don't know the answer, because it feels like this morning we're decoupling. But is that still the reality? Can we divorce ourselves from what happens on Wall Street?
I think it really depends on what's driving that sell-off. European equities are more geared towards growth and towards international trade. If you look at the Stoxx 600, 60% of revenues come from outside of the EU. That figure for the S&P 500 is under 30%. So European equities more exposed to trade and to growth. So if the sell-off is driven by significant growth fears, then I would say they're not insulated. But if the sell-off is driven by specific concentrated risks around concentration in tech and so on, then Europe is a diversifier.
Is a rearmament story, is a Europe moving into a different phase, inflationary or deflationary? Because it feels like, I talk to the civil guys in aerospace all the time. They're telling me they've still got massive supply chain issues.
Yeah.
And that they're still struggling to find the stuff they need. If Europe is about to embark on a major industrial program, is that inflationary? Is that something we need to think about and fold into our thinking? Because at the moment, as you say, the narrative is deflationary, disinflationary. Could that be about to shift?
I think there is enough disinflationary force in Europe, although I wouldn't read too much into the drop in the inflation figures last week. I don't think the ECB is going to go even further because of those. To your point, there are some inflationary pressures as well when it comes to spending. If you look at the Bund curve, for example, that hasn't been exempt from the term premium, from the steepening of the yield curve that we've seen in US Treasuries as well. Those bonds have been correlated to your point. So it's a bit of a mixed bag. And the way that we're investing in this is we like European credit. We like European high yield. We're somewhat preferring European duration because less inflationary pressure in Europe compared to the US. But we still do look at yield curve steepeners even in the Bund curve.
Karim, so you're talking there about relative inflation pressures and where they are on either side of the Atlantic. But to pick up on Guy's point, I mean, if rearmament maybe is going to add some inflation in Europe, there are plenty of other trends you could point to that also sound at least at headline level to add inflation. So decoupling, reshoring, maybe more nationalism globally. All of this sounds as if aging populations. I wonder what role technology though plays in our inflation conversations, because in the Great Moderation, inflation tech played a big role in keeping inflation down. And I wonder whether AI does something similar or not.
It's a great question and one that we debate a lot because we identified 5 mega forces at BlackRock, and this has been a few years now. So it's not none of those 5 mega forces were created this year. We gave them names 3-4 years ago now, and so they included the aging demographics that you mentioned, which are all else equal probably more inflationary because of the supply chain tightness. They included things like the transition to net zero, which includes a lot of spending, can be somewhat inflationary as you electrify the economy, and includes also artificial intelligence. And artificial intelligence requires a lot of spending in the next few years. We forecast the spending required to double on data centers, to double between now and 2030. That can be inflationary, all else equal. However, you have the productivity boost, which is ultimately disinflationary over time. And that productivity boost, depending, and this is a moving target, the analysis, but depending how quick and how big it is, will be the offset that we need for all the other inflationary forces we're talking through.
Okay, so that's where that one falls into place. So all of that said, then, where are you looking ahead for 2025 in Europe with enthusiasm, Karim?
So we generally, we just upgraded European equities to neutral last week from the BlackRock Investment Institute. We're generally leaning into that European trade, which, as I mentioned, referencing the poll that I shared at the start, is still right now in that first leg of reduction of risk premium priced into European equities, which can have a bit more legs to go. For that next leg, we want to start seeing earnings pick up. Earnings did better than expected this season in Europe, but they're not as good as the US. We want to see them pick up to get a bit more fundamental backup to the European trade. Sectors we like: luxury, banks. Those are two sectors that we look at in Europe.
But are you not a bit late to that party with European equities? You know, just upgrading them to neutral now. This is the point where some of our other guests are saying, or had been saying, get on them, and are now stepping away from them because they're saying they're overbought.
So, we have been talking about European equities for a few months now, but we've been highlighting the opportunity in active strategies. And, I've done this, I've shared these thoughts here on this program for a few months now, but this idea that dispersion in European equities is at the highest it's been since 2009. That has to say something. It says that stock picking in Europe works, and you can generate good alpha by going active. And that applied a few months ago and still applies today.
Graham, great to see you. Thanks for stopping by to see us. Graham Tudor, Head of EMEA Investment Strategy at BlackRock. Thank you very much indeed. Let's take a look at the Core 6, figure out what is happening out there. Not many defence stocks on this board, but let's show you what is happening in terms of some of the more heavily weighted stocks here in Europe. Generally softer this morning. Farmers down, luxuries a little bit lower. Interesting that tech's catching something of a bid, but as we've already indicated, the story really is what is happening in the defence space right now. Europe over the last few years has been known for some of its luxury names, a few tech names, but not many. Defence stocks have underperformed. That is changing rapidly.
Coming up on the programme, we head to Milan as Fashion Week there draws to a close. We'll discuss what Prada's potential purchase of Versace means for European luxury. We'll have more on that sector when we come back. This is Bloomberg.
Listen carefully.
Stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. 17 minutes into today's
1,200 on that stock in terms of euros. Traded around 200 euros a piece before the outbreak of the war in Ukraine. And as we can see there, we've brought a second board up in terms of some of the other movers. 15 out of the top 20 stocks in Europe today, all in the defence stock. Clearly the biggest driver of the market moves today. Massive jumps. Some of these smaller ones in the UK as well, getting a boost as well. Saab in Stockholm up 14%. Incredible moves following all that news flow over the weekend. And also a couple of small indicators in terms of some of the underperformers are the ones exposed to Ukraine and Russia. Raiffeisen Bank, a company that still has a big bank in Russia, and also Ferexpo, a miner that is based in Ukraine but trades in London, weaker, potentially showing us the sentiment on those market moves today in terms of all of the stories that we saw breaking following that meeting between Zelensky and Trump. Then in terms of Airbus, we did get news of potentially a rebound in some of their orders in the last month, though also, as Guy was mentioning earlier, this is also a bit of a defence read across, given Airbus does have some defence exposure as well, but nonetheless getting a boost on potentially higher orders in the last month for Airbus. Then in terms of Shell, looking to possibly sell part of their chemicals business. This is in the Wall Street Journal, continuing the strong year to date we've had for that company, outperforming the big rival BP, of course, being the main rivalry on those ones. Getting a boost this morning, up around 1% for Shell at the moment. Then finally, on the ratings changes, Deutsche Bank upgrades AB InBev to buy, potentially going to be buying back $30 billion worth of stock in the coming years as they get a rebound.
Sense of what's in front of me. Joining us now from Milan, our Bloomberg Bureau Chief, Tommaso Erpart. So some M&A in the offing, Tommaso. Tell us what's at stake.
Yeah, it's we broke news last night that Prada is getting closer to the acquisition of Versace. The two companies, Versace is owned by Capri. The two companies somehow agreed on a valuation which is getting close to 1.5 billion euros. Versace was bought in 2018 by Capri for 1.8 billion euros. It's a very interesting and somehow iconic deal. If it happens, it will put together two of the house of names of the Italian fashion industry, and for Prada will be clearly a big acquisition, probably its biggest acquisition since about 25 years ago, and it shows that Prada want to remain independent in a luxury sector which is concentrating among bigger players.
Obviously, we've seen consolidation in this industry over the last few years. Is this another example of that? Is this the formation of another big group? Obviously, it's tiny compared with some of the massive giants like LVMH. But what does this mean for the wider luxury industry? Are we going to see another phase of consolidation?
We are seeing for the first time in several decades a consolidation in Italy. So this is probably the beginning of an Italian bigger fashion group able to compete. The downturn of the luxury industry, analysts are expecting another very strong quarter. Its sister brand Miu Miu is clearly doing results which are much better from the rest of the industry's double sales in the third quarter, and has a potential to boost its revenue from about 1 billion to 2 billion according to analysts. So Prada is going to show likely very strong results, and so it's time probably to do a bold acquisition to put together its minimalist style with the maximalist side of Versace. So are two brands which can be complementary because they are very different.
Tommaso, great stuff. Thanks for the story. Thanks for breaking it. Tommaso Erpart, Bloomberg's Milan Bureau Chief, joining us on a deal potentially you could see play out over the next few days. Let's talk quickly about crypto. Surging yesterday, circa 4 o'clock UK time. See a big rally coming through. Donald Trump obviously at the epicenter of the action, once again talking about this reserve that they could set up in the United States. We're fading that move a little bit this morning.
Yeah, absolutely. So Bitcoin down by 2.7%, Ethereum down by over 6% this morning. So it hasn't necessarily, I mean, we haven't unwind all of those gains, but yeah, that sense of enthusiasm over the weekend certainly waning.
Yeah, so not actually going closer towards that last record, which I would note was $109,000. We look ahead to this crypto summit that's happening on Friday at the White House. So Trump hosting the first one ever. What a turnaround, you know, from the days when he used to call crypto a scam. But likely to see founders, CEOs, investors there talking about, you know, regulation and opportunity in terms of crypto.
Strategic purpose and function. We'll certainly follow that one and ask those questions.
Cue a joke about the fears of the gold going missing at Fort Knox.
Yes, probably easier if we're talking about crypto. Anyway, we'll come back. Okay, what do we got next? Let's talk about what is coming up. We need to get back to this geopolitical story that is moving stocks so much this morning, particularly defence stocks. Huge gains being generated with the names of, with the likes of Rheinmetall and BAE Systems up strongly. The UK Prime Minister, Keir Starmer, telling European leaders they need to get real about defence spending. We're going to discuss security funding. How do we deal with the gap in funding? Well, our next guest, Rob Murray, the former head of innovation at NATO, joining us to talk about a defence bank in Europe. Is this one of the potential routes that we could be talking about? We'll discuss that next. This is Bloomberg.
opportunity with those businesses. Opportunity with those businesses.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
We're 30 minutes into the equity market session here in Europe.
Founder, very good to have you with us, Rob. Thank you for coming in to speak to us. So this is all about setting up a multilateral institution to help Europe fund its defence spending. You haven't come with a NATO background. There seems to be plenty of people listed in this who maybe also have some NATO experience. Is there a role for the US? Are you assuming any involvement in the US in making this funding model work?
Yeah, it's a really good question. And, fundamentally, what are we trying to solve for? What's the problem we're trying to solve for? First of all, we've got to get significant levels of money into nation states so they can spend on defence. That's really clear and came out yesterday. It's very clear, and I think we're going to hear more of that later this week. But even if we do all of that, the second challenge we've got to figure out is how we can spend that money, get that money through Ministries of Defence and contract it out. And even if all of that happens, we've then got to be able to scale up the production capacity for then actually companies to invest all of this. Now, when we think about production capacity, the United States is where significant levels of industrial defence production capacity exists. So any sort of multilateral bank that is going to support European defence and also actually support American activity as well economically, has to involve the United States. And the United States is very much open to this idea based on discussions we've had.
Oh, really? So you have had, because I was looking at anchor investors, the wider membership group that you're proposing. Have you had conversations with the Americans that suggest they would participate? Because the mood music around NATO is not quite so positive.
No, you're right. I mean, look, it would be the geopolitical situation we are in right now. I was in Munich a couple of weeks ago.
The bank. Why don't we just issue lots of debt and give it to the MOD?
Well, Guy, that's a very good question. And the way I see this is it's not an all. This is an and, right? I think it's a package. And I think that we're going to have to see new architectures drawn. We've got a new systemic challenge we're facing. There's about 40 multilateral banks globally, World Bank, European Investment Bank, etc. None of them have a mandate for defence and security. And so we're going to have to create one in order to perhaps support some of those efforts I talked about. But joint debt will be part of this as well. Also, we need to understand the markets in this. So I think if we're to solely look at the way in which debt instruments are issued for bond markets, then I'm not sure the market can take all of that. But a multilateral with a AAA rating, that's a slightly different story. But I want to emphasise the point, though, that there's going to have to be a suite of tools, financial tools issued.
I spent a lot of time talking to civil aviation companies, and for the last few years, their biggest challenge has been not at the OEM level, not at the Saab, not at the kind of Rheinmetall level. It's been further down the supply chain. And the issue there has been that these companies have not been able to get the finance they need to invest in the ramp that Airbus and Boeing and other companies have been talking about. As we look to scale European defence, is that where actually the biggest challenge comes? It's not in the kind of OEM level, it's the tier 1, tier 2, tier 3 suppliers. Is that the problem maybe that the bank would help to solve as we accelerate this ramp into defence spending?
Yeah, you've really hit the nail on the head there, because fundamentally, going down that supply chain, going down to those smaller companies you highlight, that is where they stress the beauty of this sort of approach.
Do you think the bond market would be more willing to absorb some of this if the focus were on European companies and some of those supply and capacity issues could be solved and more of this money was going to European firms? I know that that's not going to get solved overnight. We've talked already about US defence companies and their capacity, but do you think if it had more of an upside for European economic growth, it would help?
Yeah, and that's a really important point, because let's take a slight step back now. Let's just imagine that we're going to do this Europe only, in this sort of approach. The bottom line is we just don't have the production capacity. So even though we're seeing the market reaction this morning, we're seeing those numbers go up, in terms of actual speed, everything's about speed now. It's about speed of production. And we simply don't have that. We have to be able to build that capacity. So therefore, we want to be able to do two things at once. We want to be able to work with the United States and, quite frankly, other allies around the world as well, where there is that production capacity, be able to build up, get the actual equipment and armaments and so forth into Europe, whilst also building up Europe's production capacity. And that is why the DSR bank, with the way it's modelled, will be able to actually achieve that.
So what is it that you spend on? Is it drones? We were talking about the threats to drones. If Starlink, for example, got turned off in Ukraine, where do you put this investment?
Yeah, so, I mean, this is important, because actually what you're really getting at there, Lizzie, is that how are we thinking about warfare? And the risk here is that when nations use the money that's going to be coming to them, in whatever flavour that happens, and the DSR bank should be one of them, is that they look at legacy, they look backward. You're going to be on the hook to an international financial institution financially. That will start to nudge the culture. You're going to be on the hook to an international financial institution financially. That will start to nudge the culture of defence procurement and start to move at the speed of relevance.
And what's the role of something like the European Investment Bank here? Have you had conversations in Brussels about tying up with that institution?
Yeah, absolutely. I've had speak to the EIB folks quite regularly on this. It's really tough for the EIB because there's been a huge lot of political pressure on them for quite some time to spend more on defence. And there's been a sort of drip approach with regards to expanding this definition of what's called dual use, and what that means and so forth. The reality, though, is that for the EIB and for all multilateral banks, they're governed by their charters. Their charters are international treaties. And therefore, if you want to change it, you've got to open it up. If you open it up, just to add in a sentence, you've got to open up the whole thing. Yep. And then it's got to go through parliaments to be ratified. It's not realistic in the time frame we need. And so the EIB is a phenomenal institution, and they are a big proponent of what I'm proposing because they understand that it complements their work and their activity, and it's definitely not a substitute.
How does Europe get better at defence procurement? Is it at a national level? Is it at a programme level? Is it at a corporate level? Where's the easiest alignment going to happen within those areas?
There's a lot of views on this. My personal view is that I would love to see, we've got to think, again, take a slight step back. Why are we doing procurement? We're doing procurement to get stuff into the hands of end users, of operators, of soldiers as quickly as possible. So if the time comes, they can win. Right? Sure. It's about, so the point being is how best to do that. Decentralization is huge. What we've seen in Ukraine with procurement is we've seen that come with that. Of course there are. I suppose the risk of doing that is you lose resilience. And because if you're going down, if you've got, let's say for argument's sake, one type of tank, one type of helicopter, one supply chain that does all that. Yes, it might increase speed in terms of procurement, but it becomes very brittle in terms of actually how these things are manufactured and made and at a resilience level. I think there's also a competition element to here. Talking to the Swedish Defence Minister a few weeks ago about this, and he was very keen that no, we must have competition. Now, personally, what is the real issue here is the manner in which things are procured, the manner in which things are bought, and I think we have to have a much more joined-up approach on that. NATO has a procurement agency. Nations should be using that more because that provides that coherence. Equally, there's a very good paper out of Bruegel, the Bruegel think tank by Günter Wolf, that talks about this as well, about having more centralisation of how procurement takes place. Exactly who delivers it, okay, I think we probably do want a little bit more competition in there, but you're absolutely right about interoperability. It'd be madness to have all load of stuff that doesn't function together. And that goes back to how the Ukrainians have done incredible work over the last 3 years or so in actually solving for that problem. And we have to have the strategic humility and awareness to learn from that.
Okay, Rob Murray, former head of innovation at NATO and founder of the Defence, Security and Resilience Bank, on how we can rip up the rule book and solve this defence spending issue. Let's get another voice on this now. Finland's president says that Russia must be countered with strength, otherwise it won't stop with Ukraine. Alexander Stubb spoke to Bloomberg's Francine Lacroix.
Sometimes what happens in marriage or in other types of relationships, you sort of go into your corner and sulk. But you have to come out of there, have a conversation, shake hands, and move on.
And do you think we're close to that
Yes,
point?
I hope we're moving. I mean, I think one of the things that we're trying to do in London with this summit organized by British Prime Minister Keir Starmer is to get a reading of the 3 meetings that were held with President Trump last week, take the best parts of it and find a way forward.
What does Europe need to do now, though?
We need to have a plan. One of the problems is that we have sort of this cacophonic diplomacy. We have different types of groupings and organizations dealing with different types of things. If we want to have an initiative, there needs to be a European and Ukrainian peace plan with which we can then talk with President Trump and later on with President Putin.
What is your message today?
My message today is that we need a plan which should have 3 phases. First, what do we do before the negotiations start? In other words, put Ukraine into a position of strength, give them military, political, and financial support, and put more pressure on Russia, sanctions, and use the frozen assets. And then find some kind of security arrangements where Ukraine takes the lead, Europe supports, and the US provides the backstop. That's stage number 1. Give that as a plan. Stage number 2 is a ceasefire, and stage number 3 is actual peace negotiations. We just need to put things together, and I think we are in the right direction to do that.
President, who speaks for Europe?
Good question. I think the late Henry Kissinger once said European foreign policy is all a good thing, but who should I call? Right now, there are too many phone numbers. Very optimistic. I actually, I'm an EU nerd. I've been that for 30 years, and I've never seen the European, I'm an EU nerd. I've been that for 30 years, and I've never seen the European Union more united. Actually, for the past 10 years, it started with Brexit, went on with Trump's first term, then COVID, war in Ukraine, energy, and now finding a peace solution. It's a little bit cacophonic, but it is united.
Do you worry that Russia is trying to influence different spheres, and with what's happening in the US administration, it makes it more difficult for Europe to go forward?
We need the United States, and that's why I think that the minerals deal is so important, because that could be the tipping point, which then gives a very strong business stake for the President of the United States, who works, for better or for worse, on a very transactional basis. So this is the reason I'm hopeful that we'll find a solution, and I think London is important from that perspective as well.
Why is it important to have Europe at the table when any peace agreement or any other agreement is negotiated between the US and Russia?
Because this is not only about the independence, sovereignty, and territorial integrity of Ukraine. This is also about European security. It's about the free world, and it is about the international rules-based order. That's why Europe should be involved.
Finland's President Alexander Stubb speaking there to Bloomberg's Francine Lacroix. Coming up, investors await Trump tariffs on Canada, China, and Mexico. We think they're going to take effect tomorrow morning, London time, 5:01 a.m. We're going to bring you more on what you should expect. That conversation is next. This is Bloomberg.
What about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area.
In green on the screen for the DAX and the FTSE 100. The CAC not moving much at the moment, but there is FTSE 100. The CAC not moving much at the moment, but there is outperformance, of course, for the defence names this morning. Double-digit growth for some of these names this morning. Leonardo, BAE, Saab, Thales. Rheinmetall, interestingly, pairing some of its earlier gains, but still up 9% this morning. But let's turn to another story that is rippling through these markets, and it is, of course, tariffs. President Donald Trump just one day away from slapping new tariffs on Canada and Mexico and doubling a levy on China. The moves are set to upend ties with the biggest US trading partners, and we can speak now to Brendan Murray, who leads Bloomberg's global trade coverage. Brendan, when we look into these markets, Valerie Teitel was saying it earlier, the FX market in particular suggests that when it comes to Mexico and Canada, you're going to see another delay, not implementation. I wonder, when they're just kind of a negotiating tactic, at what point do they lose their power if the bark is never followed up with a bite?
No, exactly. That's the main question is, the 25% tariff on Canada and Mexico would have an immediate and very large detrimental effect on the U.S. economy. It would be immediately felt through the auto industry. So you can imagine auto industry CEOs in the U.S. are going to be on the phone to the president to tell him, if you do this, production shutdowns are coming, job losses are coming. So you could imagine that the pressure will be very high on the U.S. president to delay. Perhaps he's got his joint session of Congress. We've had 10% tariffs on Chinese imports for the past month. We've had 10% tariffs on Chinese imports for the past month. Importers, U.S. companies are adjusting, but you've had the CEO of Walmart come out recently and say, American consumers are feeling the stress of this kind of thing. And you double it to 20%, that's even going to be even more stress. Look at Apple, which makes a lot of iPhones in China. Those are now those could become 20% more expensive than they were a month ago. Will consumers ultimately feel the sting of that? I think is a real question that the Trump administration thinks if we phase these in and we bring China to the negotiating table at some point, then we can perhaps work out a deal. But in the meantime, the tariffs are the pressure that we're going to apply.
This time tomorrow, do you think tariffs will be on Mexico and Canada?
I wouldn't want to predict anything, but I would imagine that there will be some sort of 11th hour announcement of a delay.
Is it lower or a delay? I guess is the question. What does that look like?
I would guess that there would be a delay.
Right. Another delay.
Another month, and more time to maybe cite some progress, but we're not there yet. Maybe some smaller tariffs on a few items, sort of a token, follow through on the bluff that was mentioned. So I would imagine that when we get up tomorrow and the president is getting ready for his speech, the stock market is not going to be crashing because North America is in a trade war.
Okay, there you go, Lizzie. Brendan, nice to see you. Thank you very much indeed. We're still going to have a pretty to get through between now and then. The story this morning, though, is definitely what's happening with these defence stocks. Yeah. Huge rallies being generated. This morning, though, is definitely what's happening with these defence stocks. Yeah. Huge rallies being generated across the board in terms of the defence stories that we are watching. As you can see, some really big gains. Some of them being paired a little bit, but these are huge gains on the back of already big gains. These stocks, some of these stocks are massively already year to date?
Yeah, absolutely. I was just going to go through some of those. Rheinmetall, even though it's paired its gains today, but Rheinmetall up 77% year to date. Leonardo up by 63%. Thales and Saab, both of those up by more than 45% year to date. The numbers those are.
But when you look at the bond space, 2-year bond yields down a basis point, 10-year bond yields up 2 basis points. Is that because the bond market kind of saw this coming already?
Maybe. It feels like we've been talking about this for weeks and weeks, but stocks, something woke stocks up today.
Absolutely. We've still got a lot to go for the bond market. Manufacturing ISM later out of the United States, the ECB later on this week. Anyway, it's been a busy morning. Hope you've enjoyed it. The Pulse is next. This is Bloomberg.
Events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Volodymyr Zelensky says he's willing to meet Donald Trump again if invited back to the U.S. after their White House clash, while key European leaders rally behind Ukraine. The issuance by some of these countries, the FTSE down, actually gaining, the FTSE gaining some 0.2%, so is the DAX, the IBEX down 0.8%. Now you're gaining, defense stocks rallying again. This is thanks to a concerted push by European leaders that is fueling this wave of military spending. BAE Systems gaining 13%, Dassault and also Rheinmetall gaining some 9%. Now cross-asset, look, the picture is a little bit more uncertainty when it comes to tariffs. If they do come in place tomorrow as expected, it means it would be on around $1.5 trillion worth of goods. That's a huge, unprecedented tariff wave. And so it's weighing on a couple of the assets that we look at the most. You can see U.S. 10-year yield at 4.2291, euro dollar 104.03, and then Bitcoin actually gaining a touch compared to the 25% sell-off that we saw in the last 3 weeks at 91,238. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Ukraine's president says he's willing to meet Donald Trump again if the U.S. president invites him to, quote, solve real problems. Volodymyr Zelensky met European leaders in London yesterday after clashing with the U.S. president and vice president in Washington on Friday. Now, French media reported that France and the U.K. are also working on a plan for a one-month truce. The U.K.
saying that if you use a knife or a bayonet and push in and it's soft, go all the way. If it's hard, pull back. Let's be hard.
Well, joining us now is Fabrice Potier, Chief Executive of Rasmussen Global and a former Director of Policy Planning at NATO. Here with us in the studio is also Stephanie Baker, a Bloomberg senior writer who spent a lot of time looking at the Russian economy and what Vladimir Putin's endgame is. So thank you both for joining us. Stephanie, it's been an extraordinary 4 days. I mean, I don't even know where to start. What did we witness in the Oval Office, and what will be the long-term repercussions of what Europe has to pay up?
Right. So I think the stark difference that was revealed by that Oval Office showdown was that Zelensky views a ceasefire without security guarantees as not sufficient to guarantee long-term peace. Whereas it looked like Trump was viewing his idea of a deal is just stop the fighting, try to do a quick deal, and it doesn't matter if there are U.S. security guarantees attached. And I think that is the fundamental problem here that both Europe and Zelensky needs to overcome. Trump administration officials are now demanding an apology from Zelensky. Zelensky obviously doesn't think he's done anything wrong. He was just trying to explain Ukraine's position. He's a war-weary leader with tremendous pride, and I think he was trying to explain that Putin can't be trusted. And he was trying to respond to Trump's rhetoric that does seem to be echoing Russian talking points. And so I think that's the fundamental problem here. And, Marco Rubio gave an interview yesterday.
Is there a clear leader in this? One of the questions that keeps on coming up is actually, who do you speak to in Europe? Is there a lack of leadership, and what needs to be done now?
I think there's some clear leaders, with France and the UK being the foremost European military powers, also nuclear military powers. But that's obviously not enough. You need a European critical mass. You need a European coalition that is more than just two, that can really bring not just political depth, but also real military capabilities, because we are talking here about not necessarily a peacekeeping force, but like a reassurance deterrence force. And to deter Russia, you need some real signaling. You need to show you are committing real force, like the Finnish president was alluding. You need to show strengths. And therefore, the UK and France are not enough. I would add that I think at last we are seeing this coming off the ground. And we have been at Rasmussen Global, for example, talking about the European coalition for the past 6 months. That's the way to negotiate with Trump also, to come to the White House with something to put on the table rather than just beg for a seat at the table. And I think finally the Europeans are getting their act together.
Stephanie, what are the risks in striking a deal with Russia without plausible and strong deterrence?
Well, I've long argued that Putin does want some kind of quick deal, like a ceasefire that would include some kind of sanctions relief, which he does want. And I think he wants some breathing room to regroup and
have if the U.S. suddenly actually doesn't give anything to Ukraine anymore.
I think here, to get it right, you have three critical layers. The first one being the Ukrainian forces. We tend to forget, but this is a formidable military right now, one of the best equipped in Europe, one of the most war-ready, because they are fighting every day. And they are close to beyond 500,000 of servicemen and women deployed right now on the Ukrainian soil. So this is the first line of defense, not to be underestimated. Second, you do need European forces, possibly where we are strong in the air and maritime domain. You could see a kind of no-fly zone, anti-access effort to be able to guarantee that the non-occupied Ukraine will be able to return to business, to normal reconstruction and economic development. And finally, to make all of this potent enough vis-a-vis Putin, you do need some U.S. guarantees to the European guarantors. You do need some U.S. Political declaration, but also signaling that if something were to happen, a dramatic escalation by Russia, that it will not be just the Ukrainians and the Europeans, that the US will be there to watch our back. And I think that's what Starmer and Macron have been trying to negotiate with Trump over the past few weeks.
Stephanie, do you see a real risk of the US and Russia dividing Europe into spheres of influence?
Absolutely. I mean, I think that's what Putin's ultimate goal is. He wants his own sphere of influence, and he's achieved one of his overarching goals, which is to divide Europe instead of punishing Putin, which is, the theme of my book on the economic war against Russia, that if the Trump administration agrees to give him what he wants, stop the fighting, give him some limited sanctions relief as an inducement without any long-term security guarantees or plan to stabilize Ukraine, then that will weaken Europe long-term.
And Fabrice, with your many, many years at NATO, are you confident that NATO's deterrence will remain intact?
Well, I think that nothing has fundamentally changed, and this current U.S. administration has clearly said they were not intending on changing U.S. presence in Europe. We have to see what happens in the coming years, but I think we are fine. The question, however, is where are we going next? And I think European stability and defense is now increasingly going to happen outside NATO, outside the EU. Is going to be coalition, and maybe down the line there will be then a reconnection with NATO. But right now, NATO is no longer the first in line. This is really going to be about the Europeans doing the heavy lifting in a new kind of geometry, and this is a new world, and we have to be creative in that sense also.
Okay, Fabrice, thank you so much. Fabrice Potier, there, Chief Executive of Rasmussen Global, and Stephanie Baker, Bloomberg senior writer and author of Punishing Putin. Now, coming up, the U.S. charges towards imposing tariffs on Canada and Mexico tomorrow, barring last-minute negotiations. We'll discuss all of that with the markets, Prosima Shah of Principal Asset Management. This is Bloomberg.
On Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
On Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
And now the U.S. is set to impose tariffs on goods from Mexico and Canada tomorrow, barring any last-minute negotiations. Now, traders are also watching for China.
So there is a ton of uncertainty going on. In the worst-case scenario, from what we've been looking at, with a 25% tariff on Mexico, Canada, an additional 10% on China, it would have an impact on U.S. growth, pushing it down by around just over 1.1%. That's not enough to plunge it into recession. But of course, the economic data in the last couple of weeks has been concerning. And one of the things that we are watching very closely is, of course, the deterrent business sentiment, consumer sentiment, and what are the capex plans. So there are so many different dimensions to Trump 2.0 that is actually becoming more and more difficult to analyze what the potential economic impact could be.
Seema, where do you think it impacts first? Again, the market has definitely, over the last 3 to 4 weeks, I would say, changed from worrying about inflation to actually hurting at consumer spending. And again, this capex could have longer-term impacts if chief executives just hold off spending.
Exactly, and I think that's one of the things is for tomorrow, let's say that it's delayed for another month. Of course, that's better than the worst-case scenario of the full tariffs being introduced. But it still means that there is that lack of uncertainty weighing on capex. So this is a fairly difficult period. I think, as you said, the sentiment has shifted. The focus has gone from potentially rate hikes to now more and more people saying, well, look, is recession on the horizon? We're not there yet.
Yeah.
We still think that actually the fundamentals of the U.S. economy is still very strong.
consumer balance sheets, corporate balance sheets, strong enough to withstand the various headwinds. But of course, there is the potential that this, continues to gain a lot of steam. And of course, we don't know what else is coming. And I think that's the key thing.
China's economy, how do you play it right now? Again, given the tariffs, given that it's also a big week for some of the politics.
We're just not expecting significant upside from here.
So how do you build a portfolio in all of this? If you look at U.S. equities, do they still have a while to run, especially the big ones?
So we have maintained an overweight to U.S. equities. We've pulled back a little bit on those big Mag 7 at the beginning of this year because of valuations concerns that you could see some disappointment starting to creep in, but still some exposure there. Now, from here, I think what we've learned in the last 2 months is that global diversification has to be key. There was concerns coming into the year that European growth would be very weak, China would continue to disappoint, and yet those two markets have done extremely well. And part of that has been that there has been surprises. Some of the policy expectations haven't come through from a U.S. side, and there's been upside for global equities. I think that has to continue, that diversification, keeping that focus on some of the markets that have not, had the kind of the love to them over the last 2 years, and so are somewhat undervalued relative to the U.S. I think that U.S. equities can continue to deliver positive gains, but are we going to see gains of the sort that we've seen in the last 2 years? It's very unlikely. And it becomes really important to start going down deeper. What are the sectors? What are the kind of companies you want exposure to?
And where do you want exposure to? Especially, question marks over dollar, but it looks like at the moment it could keep on going stronger.
We're expecting the US dollar to stay somewhat strong. In terms of further dollar strength, again, it so much depends on, are the tariffs going to come through or not? We have been impressed that the EM complex has been quite resilient. So again, we're not too concerned about the EM complex still maintaining some exposure there. But within the US, the sectors, we're still looking at defensives. We do think that the US economy is slowing. Recession is not on the cards, but we were expecting a slowdown. Companies continue to stand in good stead. So we are expecting Japanese equities to continue to deliver through 2025. Some parts of emerging markets, parts of Latin America, of course, Brazil, less so in Mexico, but Brazil, Argentina, Chile still looking fairly strong. And then within Europe, actually the UK, I think, has the potential to get some upside. Valuations have been cheap. They haven't really joined in with a lot of the rally, but they are less exposed, I think, to some of the deepest concerns we have around Europe.
Seema, as always, thank you so much for joining us. Seema Shah there, Chief Global Strategist at Principal Asset Management. Now, much more to come. This is Bloomberg.
.com/invest.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take 2 numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
back, everyone. A lot of news out today. Now, the Kremlin actually putting out a statement through Interfax calling the Trump-Zelensky argument unprecedented. The Kremlin also says that the argument shows how hard a settlement in Ukraine is. Now, we have had a lot of commentary, a lot of actually columnists trying to figure out whether there was a little bit more.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was...
And if you want to learn to listen for it, we'll show you how.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in London, and these are your top stories. Volodymyr Zelensky says he's willing to meet Donald Trump again if invited back to the U.S. after the White House clash, while key European leaders rally behind Ukraine. European defense stocks jump as the region's leaders scramble to offer Ukraine support amid concerns of a U.S. pullback. Plus, markets brace for a barrage of tariffs on Canada, Mexico, and China set to take effect tomorrow. Now, the UK and France are seeking to build a coalition of peacekeeping forces and help reassure Kyiv about any potential peace deal with Russia. Now, Bloomberg understands that the two countries aim to take the plan to President Trump in the coming days after his heated exchange with Ukrainian President Zelensky in the Oval Office on Friday. Now, it follows a security summit in London on Sunday with European leaders, including the Italian Prime Minister Giorgia Meloni. She has been called a Trump whisperer and has a long-standing rapport with Elon Musk, but also has to juggle domestic pressure, including a coalition partner who wants her job. Now, let's discuss all of these subtleties with the former Italian Prime Minister, Mario Monti.
From international commitments in a broader sense, it will no longer be, I'm afraid, the champion of modern democratic capitalism as we know it, which is based, among other things, between a division between the economic power and the political power. That principle has been totally contradicted now in the UK, in the US. So in many respects, Europe has to make up for this diplomatic emergency, has to get seriously to a program for its own defense, and has to also get greater unity, because in many aspects in which there will be a vacuum from the US, Europe is the only part of the world which can come up.
But, Mr. Monti, what's your understanding of what the U.S. is trying to do right now? Are they trying to retrench, or are they actually aligning themselves with superpowers that are not democratic, such as Russia? Is there a question mark of what their intent is?
I saw the two things in parallel and linked to each other because they tend to link with autocratic powers, which means that, but this has domestic and international implications, for example, in the vision about from leadership, something like an aggressive isolation from leadership, something like an aggressive isolationism on the part of the U.S.
Is Europe strong enough to take the lead? I know, and I hear this from many corners. Now is the right time for Europe to step up. They're stepping up. I don't see a very strong leader that also has the backing at home who can truly step up.
Well, let's hope that the new German Chancellor has those basic qualities and favorable circumstances. But Europe has always made itself gradually through crisis. And we never had, in a sense, a crisis like this. And I see a lot of fast going in Europe to the idea now that I mean, it's not only the EU. Let me underline that what happened here in London in the last few days is of huge importance. And this rapprochement between the UK and the European Union in matters defense, intelligence, etc., is crucial. So and let's be frank, we also have to reconfigure who is in the European Union. Probably we have to go on with the European Union, but to build a closer agreement which does not include those countries which are in the European Union but are all with Putin, like Hungary.
Do you think NATO still remains uncertainty because of the trade tariffs coming from the U.S. that are due to come into effect this week with levies on Mexico, Canada, China, and possibly the European Union? They touch $1.5 trillion of goods. How do you see the parallels between political and the economies that are, again, it's tough to actually borrow more and spend more?
The threat of tariffs, the pre-announcement of tariffs, and then when it comes, the introduction of tariffs, may be a powerful commercial instrument in the short term, but nothing like that will alienate much of the rest of the world, beginning from the very nearby Canada and Mexico to the US. And what happened to some extent during the previous Trump administration might happen in a more gigantic way now. That is that involuntarily President Trump elevates the global status of President Xi Jinping to the champion of multilateralism, of free trade, etc., which is partly an irony. But so the US, in my very modest view, is not calculating the, President Trump is a populist. We in Italy have known through Mr. Berlusconi the father of all the populists of the Northern Hemisphere because Peron had come earlier. But the populists normally are excellent, less bound by loyalty to the US, vis-a-vis less bound by loyalty to the US vis-a-vis China. And therefore should have a fairly autonomous policy vis-a-vis China, which one day when, and I'm sure it will come, the US goes back to a more normal state of mind and policy determination, might actually be useful also for the US if Europe has exercised some, to the limit of its limited powers, but some influence on China.
Mario Monti, thank you so much, as always, for joining us. That was, of course, the former Italian Prime Minister, Mario Monti. Coming up, Finland's president urges Europe to stand up to Russia's Putin with strength in negotiations over a Ukraine peace plan. More from our interview with Alexander Stubb. That's next, and this is Bloomberg.
Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
We stood with Ukraine from the first day. We will stand with them also when a potential peace deal comes, no doubt about it, and we will probably step up our aid. But I will not make any speculation about troops now, because there's so much that needs to be, clarified. What does that mean? Is it a peace monitoring troop? Is it a peacekeeping troop? Is it going to be at the front line? Is it going to be somewhere else? What will be the security guarantees?
Norway's Prime Minister there speaking before Trump and Zelensky heated a conference on Friday on what a potential peace deal for Ukraine might look like. Now, European leaders are racing to craft a peace plan for Ukraine after meeting at a security summit here in London. I spoke to Finland's President Alexander Stubb, who was there, and started by asking him about the disastrous meeting between Presidents Trump and Zelensky.
Marriage or in other types of relationships, you sort of go into your corner and sulk. But you have to come out of there, have a conversation, shake hands, and move on.
And do you think we're close to that
Yes,
point?
I hope we're moving. I mean, I think one of the things that we're trying to do in London with this summit organized by British Prime Minister Keir Starmer is to get a reading of the 3 meetings that were held with President Trump last week, take the best parts of it and find a way forward.
What does Europe need to do now, though?
We need to have a plan. One of the problems is that we have sort of this cacophonic diplomacy. We have different types of groupings and organizations dealing with different types of things. If we want to have an initiative, there needs to be a European and Ukrainian peace plan with which we can then talk with President Trump and later on with President Putin.
What is your message today?
My message today is that we need a plan which should have 3 phases. First, what do we do before the negotiations start? In other words, put Ukraine into a position of strength, give them military, political, and financial support, and put more pressure on Russia, sanctions, and use the frozen assets. And then find some kind of security arrangements where Ukraine takes the lead, Europe supports, and the U.S. provides the backstop. That's stage number 1. Give that as a plan. Stage number 2 is a ceasefire, and stage number 3 is actual peace negotiations. We just need to put things together, and I think we are in the right direction to do that.
President, who speaks for Europe?
Good question. I think the late Henry Kissinger once said European foreign policy is all a good thing, but who should I call? Right now, there are too many phone numbers. If it was up to me, I think I'm an EU nerd. I've been that for 30 years, and I've never seen the European Union more united. Actually, for the past 10 years, it started with Brexit, went on with Trump's first term, then COVID, war in Ukraine, energy, and now finding a peace solution. It's a little bit cacophonic, but it is united.
Do you worry that Russia is trying to influence different spheres, and with what's happening in the U.S. administration, it makes it more difficult for Europe to go forward?
We need the United States, and that's why I think that the minerals deal is so important, because that could be the tipping point, which then gives a very strong business stake for the President of the United States, who works, for better or for worse, on a very transactional basis. So this is the reason I'm hopeful that we'll find a solution, and I think London is important from that perspective as well.
Why is it important to have Europe at the table when any peace agreement or any other agreement is negotiated between the U.S. and Russia?
Because this is not only about the independence, sovereignty, and territorial integrity of Ukraine. This is also about European security. It's about the free world, and it is about the international rules-based order. That's why Europe should be involved.
Alexander Stubb there, the president of Finland. Coming up, President Xi Jinping heads into China's biggest political meeting of the year as U.S. tariffs loom large. More on that next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Get your fixed income fix. Watch Bloomberg.
Of this, if you, what we heard over the weekend from the Treasury Secretary Scott Bessent was perhaps Canada and Mexico and the U.S. could form what he called a fortress North America against China. So one of the leverage points that Trump has with Mexico and Canada is say, hey, join the U.S. join the U.S. in putting tariffs on Chinese imports, and maybe the three of us could work together. So we'll have to see what comes out of those the last 12, 24 hours worth of talks today. But it sounds like there could be some sort of North American, as Bessent called it, fortress allied against the wave of Chinese imports that all three countries are anticipating.
And Brendan, how do you see, again, going forward, when you look at the state of the U.S. economy, there's a lot more worry, put inflation to one side, that chief executives are not spending money, that the consumer is not spending. So why add extra tariffs now?
Yeah, there is that risk. You wouldn't have said that 2 or 3 weeks ago, that some of the economic indicators are softening up for sure. And you have CEOs from companies like the automakers who are going to be very upset. Those companies are going to be very devastated by a 25% tariff on Canada and Mexico. So Trump is giving his address before Congress Tuesday night. He's going to want to go into that with a fair amount of optimism, and if markets are kind of crumbling around him, that's going to create an atmosphere that he doesn't want. So we'll have to see what happens today, but it would seem that something
be a big change in the Italian luxury industry. You put together two of the most iconic brands in the industry, and you reverse a trend after decades where Italian brands were bought by foreign buyers. Finally, you have somehow an Italian group which is going to be able to defend itself versus the biggest peer in the industry, obviously LVMH or Kering. We know that essentially the two parts have found a sort of an agreement on the valuation of Versace, which could pave the way for a deal be announced later this month, and the valuation puts the value of Versace a little bit less than 1.5 billion euros. As a reminder, Capri bought it in 2018 for 1.8 billion euros. So talks are progressing.
What can we expect, Tommy, from Prada's full-year results tomorrow? It feels like if there is one brand that's getting it right, it's probably Prada at the moment.
Absolutely, and even more, it's Miu Miu's sister brand. We are expecting to see another super strong quarter by Miu Miu, who somehow defied the downturn in the fashion industry by doubling its sales in the third quarter. And obviously, the strength of the brand could help in an acquisition of Versace when it comes, and it will show that Prada has somehow a stronger firepower to digest an acquisition, which is quite interesting because it would put together two brands which are very different, the minimalist Prada and the maximalist Versace. Some analysts are saying that this is good because the two brands can be really complementing themselves.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Good morning from our global headquarters in New York. I'm Manish Trenny, back alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
A coalition of the willing, UK Minister Keir Starmer and other European leaders demonstrate broad support for Ukraine after the clash at the White House with Trump. The Kremlin responds to Oval Office's breakdown, calling it unprecedented, showing how hard a settlement in Ukraine will be. In countdown to Tariff Tuesday, President Trump's levies on Canada, Mexico, and China are ready to take effect. Good
stocks.
He talked about that yet again over the weekend in an interview. Manis, we also have some individual stocks we're keeping an eye on. As a sector, European defensive stocks, you can see a big move across the board. BAE Systems, that's up 14% this morning. Rheinmetall, others surging on the implications of increased defense spending in Europe.
Keep an eye on MicroStrategy and other crypto stocks. President Donald Trump, as I just said, once again talked up the plan for strategic crypto reserve, naming Bitcoin later in the day, also recouping some of its losses.
And Morgan Stanley raising their recommendation for Chipotle. The firm's analysts saying that the stock is a buy, seeing it rise to $70. Those shares up 2.7% in the pre-market. The CEO of Chipotle also speaking to NBC in an interview over the weekend, saying that they plan to absorb increases in costs rather than passing them on to consumers.
And in just a few moments, Peter Kinsella will join us from Union Bancaire Privé, and later in the hour, Katrina Dudley from Franklin Templeton, their view on the markets. Danny, good to be back with you. It's amazing how 8 days ago when I left you, we were talking about hot CPI, PPI, maybe even rate hikes, no rate cuts, and I come back to you, and we've completely shifted the vibe. I think that's what Laurie Calvasino was writing about, the shift in the vibes, and it has shifted quite dramatically.
Yeah, a shift in the vibes. I have to say multiple analysts using that type of language. Barclays is one of them this morning, and that's why the data is so important this week, Manis. We're going to get jobs on Friday. We've had a patch of soft data from the concerns over tariffs and government layoffs, consumer confidence taking a hit, consumer spending taking a hit. I've seen multiple people downgrade their GDP expectations. Atlanta Fed GDP tracker now also showing a negative. U.S. president invites him to, quote, solve real problems. In the meantime, European leaders are fast-tracking efforts to improve their own defense capabilities. Here's the UK Prime Minister Keir Starmer speaking after the European Security Summit.
Not every nation will feel able to contribute, but that can't mean that we sit back. Instead, those willing will intensify planning now with real urgency. The UK is prepared to back this with boots on the ground and planes in the air. Together with others, Europe must do the heavy lifting.
Joining us now is Bloomberg's Oliver Crook, who is in London following those developments. Oliver, what is the latest?
Yeah, so listen, Danny, I mean, I think it's still many European leaders were sort of reeling from the shock of what they saw on Friday and what the sort of implications would be, not only for Ukraine, its future sovereignty and sort of how the war is going to go, but actually for the European continent. And I think that we heard some of that concern from Keir Starmer, from many of the leaders that met over the weekend to discuss basically what the next step is and what throughout this whole conflict we've had no shortage from the Europeans of very sort of strong rhetoric. The question is, how do you respond to it? Now what they've set up a meeting for later in this week, and there's sort of two sides of this. One is the thing that Keir Starmer had alluded to right there, the coalition of the willing. What does that mean? What security guarantees can basically the Europeans provide on their own to help reassure the United States and get U.S. backing? Though it's very hard to sort of imagine. I mean, I've spoken to a number of different leaders and lawmakers. When you talk to them about the possibility of having European troops on the ground in Ukraine, the question is, what function will they serve? Will they just be there to sort of observe that the conditions of peace remain, or are they going to Turkey, obviously, who's got one of the largest standing armies here in Europe? But it's interesting. I spoke to the Norwegian Prime Minister. I said, listen, well, then are you willing to tap the Norwegian Sovereign Wealth Fund, the biggest in the world, to help build out that sort of defense? This answer was, no, we're not really willing to go there. They're only going to hit about 2% this year. They share a border with Russia. I asked if he's willing to go further. He says, yes, maybe, but maybe not just right now. Again, this is sort of the concern here in Europe, that while there is a lot of urgency being expressed in very sort of colorful terms, the sort of concrete solutions are not there yet.
Oliver, good morning. We've had one of the first responses from the Kremlin. They talk about what happened in the Oval Office on Friday. What is their response so far?
Yeah, so listen, we've heard a number of different things. I mean, I think it's fair to say that overall they are fairly pleased with how the meeting went in the Oval Office between Volodymyr Zelensky and Donald Trump. I mean, we had heard other sort of messages from, one of the spokesmen, Peskov, talking that basically the Russian, and they need to sort of appraise what is it that they can bring to the table for Donald Trump in order to have their voice heard and be a part of this architecture going forward, and that, Manus, to this day is still not very clear.
Oliver, thank you very much. Oliver Crook, tracking the very latest headlines from London. Here in the United States, President Trump is on the verge of slapping a new 25% tariff on Canada and Mexico while doubling the levy on China. Now, the moves are scheduled to take place on Tuesday, and they would easily be among the most sweeping of the Trump era. Joining us now is Brendan Murray, who heads our global trade coverage for Bloomberg. The Commerce Secretary calls the situation fluid. Brendan, good morning to you. Scott Bessent actually talks about a coalition, perhaps, between Mexico, Canada,
in the trade war with the U.S.'s three biggest trading partners. Scott Bessent, as you mentioned, called it what could a potential outcome, the creation of what he called a fortress North America. That's where Canada, Mexico, and the U.S. Throw up more import barriers to Chinese imports and what they see as a flood of Chinese products coming into all three countries. So we'll see how it all shakes out throughout the day. Commerce Secretary Howard Lutnick also left the window open to some sort of flexibility or some sort of deal between Canada and Mexico and the U.S. at least. So it sounds like we're going to head to the midnight deadline, with a potential for something to happen. But the window is open for the leadership to negotiate their way out of something like a full-scale trade war.
Right, Lutnick speaking on Fox News yesterday, saying that there will indeed be tariffs implemented, but the level of which is what he thrown into question. Brendan, we're also going to get China's NPC this weekend. And China has been one of those tariffs that have indeed been put on for all of the threats. Of course, this is an additional 10% one. But what kind of response are we seeing from China specifically, a nation that has gotten the threat realized, that the bark and bite has come to realization?
Yeah, exactly. China's response to the first 10% tariffs that we saw imposed a month ago was a fairly measured one. They seem like they're kind of keeping their powder dry. Going into this big national political meeting this week, you could expect that they would retaliate against the day and the weeks ahead. But it seems like markets are the day and the weeks ahead. But it seems like markets are playing it being sort of reserved in casting judgment on which direction it's going to go in so far.
Waiting to see the white of the tariff's eyes before casting judgment. Brendan, thank you so much. Bloomberg's Brendan Murray. Let's get you some other stories that are trending on the terminal this morning. I mentioned this, investors are watching for announcements on more stimulus from China's economy. The annual meeting of the National People's Congress kicks off on Tuesday. The challenge, ramping up the government's investment and encouraging businesses and consumers to spend to offset the impact of U.S. tariffs.
Prada is moving closer to a deal to buy Versace from Capri Holdings. That's according to sources. They could finalize a deal this month after agreeing to a price of nearly $1.6 billion. Capri, which bought Versace in 2018 for about 1.8 billion euros, didn't immediately respond to requests for comment on Sunday. Prada also declined to comment.
And cryptocurrencies open March with a rally, recouping some of their losses from what was their worst month since 2022 in January. President Trump posted about plans for a strategic crypto reserve, a sign of loyalty to an industry that donated heavily to his presidential campaign. Still, many of Trump's plans are unknown, including how much crypto the government will actually buy.
Coming up in the show, we catch up with Peter Kinsella on the reversal in the Trump trade. That's next on Bloomberg.
That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative. If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Bloomberg Brief. I'm Manus Cranny alongside Danny Berger in New York. We're counting down to Tariff Tuesday, that 25% tariff on all of the imports from Canada and Mexico hitting China, twice with an additional 10%. Peter Kinsella of Union Bancaire Privée thinks that the worst case scenarios are now less likely than before. Writing this, investors can be forgiven for feeling exhausted with these developments. However, it is important.
It's become, I would say, difficult, if not impossible, to trade the tariff story, right? Because we have Trump saying one thing, the Treasury saying another, and the end result really is that we've actually seen very well-behaved currencies. They've not been doing an awful lot. Dollar CNY is pretty much where it is today, where it was in early Jan, and same story for dollar CAD. So it does appear as though Trump is really high implied but low realized vol.
It's not moving to that, Peter, and good morning to you. Great to see you. It's not moving that. And then also the euro seems to not be budging on German news on just how much they might spend on defense. George Servalis over at Deutsche Bank notes that it might be as much as they invested in East Germany since reunification. Why isn't that moving the needle at all for euro dollar?
Right. I think it's a very good point, Danny, and I firmly expect that long-end German yields will rise pretty materially in the coming months and quarters. And I think once that really starts to manifest itself, you're then going to see the euro catching a bid. What we've seen just in recent days, obviously the election last week with Germany, they're going to move towards a removal of the debt brake. We now have two huge fiscal events, right? First, obviously, is what we're going to have to see on defense, not just in Germany, but across all of Europe. And the second one, of course, is further investment to improve German infrastructure. So that's going to have a very material effect at the long end of the curve. The last time we saw this was as Mr. Sar, and if anything, the prospect of a ceasefire in Ukraine does imply we'll have lower gas prices. So, I'm not really been a big believer in parity from the get-go. But I definitely agree with the sentiment. We're going to begin to see very quickly a lot of the Wall Street banks changing their forecasts on euro because the conditions for a material downside in euro dollar are rapidly dissipating. And really, you're going to see that in the coming weeks.
Peter, you've been spot on with that call to avoid the euro parity call when so many other people had it to start the year. You also have raised your price target, you and the team on gold. You now see it at 3,300 by the year end. Why can the rally continue?
Well, look, I think what you saw on Friday night is the perfect example of why it could continue. We're seeing a geopolitical fragmentation. You're seeing ongoing, massive physical purchases by central banks, large investor interest, and increasing retail interest. So, in a sense, really, there are periods in which gold does very well, and we're moving towards an environment of pretty high, I would say, nominal GDP growth in the States and for sure in Europe in the coming years, and that's consistent with with gold outperformance. Not to mention what will be a very strained geopolitical environment. So I think it's a no-brainer for me to remain long gold and indeed to see it trading at materially higher levels in the coming years.
Do we build up momentum to short the dollar? And I ask that because the hedge fund managers, the asset managers, they've been sort of dropping off for the past 6 weeks. What is it that accelerates that perhaps sell-off in the dollar?
I would say two things. One, either a policy move from the U.S. Treasury. People are talking about a so-called Mar-a-Lago Accord.
The Oscars coming up next.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Let's take a look at what's on the front pages this morning. First up, the Bloomberg has this, that Israel has halted all humanitarian aid and imports to the Gaza Strip. Egypt, Qatar, Saudi Arabia, all arguing that aid should not be used as a weapon, criticizing the move. Hamas had also rejected a U.S. proposal to extend the ceasefire.
Next up, New York Times, Danny, here we've got the former governor, Andrew Cuomo, announcing he is running for New York City mayor. Now, his entrance into the race was met with immediate blowback, especially by women's rights organizations. New York Mayor Eric Adams says he welcomes the competition. Bring it on.
And finally, on the Wall Street Journal, leading with the independent film Anora, taking home Best Picture at the Oscars last night. It's a movie about a sex worker who marries the son of a Russian oligarch, so definitely a different type of plot for the Oscars. It is the first independent film, Manis, to ever win the top prize. Had a budget of just $6 million, so there you go. You don't need to spend multiples of that in order to win the Oscars.
No, I mean, you might have spent it on Dune, you might have spent it on Wicked, but I was just looking at what...
also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, first woman to own 3 major, have a stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
From our global headquarters in New York City, welcome to Bloomberg Brief. Danny Berger alongside Manus Cranny. Let's set your agenda.
Coalition of the Willing, Europe races to secure Ukraine and get President Zelensky back to the negotiation table. The Kremlin responds to the Oval Office breakdown, calling it unprecedented, showing how hard a settlement in Ukraine will be. And countdown to Tariff Tuesday. President Trump's levies on Canada, Mexico, and China are set to roll into effect. Danny, good morning. Good to be back.
Good to have you back, Manus. You missed quite the week where we did end up lower for the week, even though the S&P ended up higher. We tried to add some weight to that this morning. We're still below 6,000, up about 1/3% for both S&P and NASDAQ. Russell 2000, that outperforms. A lot on the agenda for you. Canada, Mexico, China tariffs come tomorrow. Jobs Friday, a Powell speech on Friday, ECB on Thursday. Bitcoin heads lower this morning, 2.4%, still above 91,000 after that tweet from Donald Trump about a strategic Bitcoin reserve, a truth post, I should say. When it comes to yields, again, we have, for the most part, the direction has been lower. We changed that this morning. Your 2-year yield, and it is an aim that the White House has accomplished, with maybe emboldens Trump tomorrow to really put those tariffs on.
And then we begin to debate, well, what is the Trump put? Is it a drop in equity? We're 1% above where we were on November the 5th, 1% away from the November the 5th close. But is it the 10-year yield, or is it a drop in the equity market that's going to be much more important to Donald Trump, the Trump put?
Here, opinions differ wildly. Michael Hartnett of Bank of America talking about his latest note that it looks something like 57,000. Mike Wilson saying this is not a White House who has been talking about this equity market. There has been somewhat of a soft patch in the data, though, but depending on who you listen to, the extent of that soft patch differs. The Atlanta Fed coming out with their latest now GDP forecaster. You can look all the way over the right hand of your screen. That is an estimated contraction of 1.5%. You go over to the New York Fed-based model, though, their model-based estimate, theirs is something closer to 3%. Joining us now, trying to make sense of it, is Katrina Dudley, Senior Investment Strategist at Franklin Templeton. Katrina, is this a growth scare? Is this a soft patch, or is it just 1 month and the data is distorted?
I think that the consensus is now coming to the fact that it is 1 month data distorted. Have a think about it. If I told you that the prices of goods are going up on Tuesday and you had that information, you would start stockpiling some of those goods if you can, if the supply is available. So it's actually very rational economic thinking. I think the big difference versus prior times is that the cost of money this time isn't free. So you can't stockpile to the same extent that we may lay here. But you talk about mortgage rates, and everyone seems to think that the mortgage rate dropping drives the decision to purchase, and it does. It's not the only factor. It's the birth rate. And why? Because people have, expanding families for various reasons, and you need bigger places, and that's what I keep hearing from a lot of the younger people that we speak to and interview. And the second thing is it's sentiment around your job. And so they're the two things. I think the mortgage rate, yes, it does factor in there in terms of the affordability of the house, but what I think that actually drives is the size of the house you can purchase and the area that you can purchase in, not so much the actual intention to purchase.
In regards to the job market, there has been some policy announcements that have had ruptures. I mean, very localized, kind of DC area for the moment. But it's along that with market unfriendly policies to start with the Trump administration, to get tariffs, immigration policies, not necessarily deregulation, and market-friendly tax cuts. You say that it's just been 1 month of data, but is there anything coming from the White House that is behind some of the sentiment shift that could have uglier ramifications?
Look, it's always good to get the bad news out of the way first. Okay, so let's just think about it. We're only in week 7, and he's done a lot of bad news things, and he's done it really early in the sentiment. And the fact is we have really short-term memories. So there's a lot of good news to come. Stop laughing.
I definitely have a short-term memory. Go on.
I know, but there is a lot of good news to come, in terms of the tax rate reductions. That was actually the narrative going into November. It was this very positive message, and we weren't.
Is that the risk, that one is too cautious for this year? As you said, we've had a lot, and it's been reasonably well absorbed.
Look, how much more cautious can the market get? If you look at the fear and greed index, we're right in that red zone that kind of flashes and says caution, caution, caution. So that's the first data point. The second thing is if you look at expectations, so consumer expectations for inflation, everyone is actually expecting a lot more inflation. That comes down to the tariff narrative, the negative headlines. And so everyone in the market, as much as we can see, is cautious. You've seen it in terms of the reallocation from the equity market into the bond market. Now, I want to be very careful to say, just because everyone is cautious, it's not always a buy signal per se. But in this case, given we've talked about some really positive news on the horizon, I think it is an opportunity here.
Well, there's the rotation from equity to bond, but also just within the equity market, away from tech, the worst month for Mag 7 since December of 2022. The defensive stocks get a bid. Does that rotation continue, or does tech leadership reemerge?
I think, look, we've talked about it. The Mag 7 is becoming the lag, LAG 7. We've spoken for some period of time about the need to have breadth in this market. If I take a look at the earnings data that we have, 75% of the S&P beat expectations by at least 7%. That's really positive in terms of the narrative on a very broad brush basis. If we look at our 2-year forward earnings expectations, we're
off Tuesday. The challenge, ramping up the government's investment and encouraging businesses and consumers to spend to offset the impact of U.S. tariffs.
Prada moving closer to a deal to buy Versace from Capri Holdings. According to sources, they could finalize a deal this month after agreeing to a price of nearly $1.6 billion. Capri, which bought Versace in 2018 for about 1.8 billion euros, did not immediately respond to requests for comments. Prada also declined to comment.
Cryptocurrencies opening March with a bang, recouping some of the losses from their worst month since 2022. President Trump again talked up his plans for a strategic crypto reserve. It's another sign of loyalty to the industry and donated heavily to his presidential campaign. So many of Trump's plans are unknown, including how much crypto the government would actually buy. Coming up on the show, Europe mobilizes around Ukraine. We bring you the very latest. Context Matters on Bloomberg.
Listen carefully.
Intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that, other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
I mean, I think the transatlantic alliance is shifting. Instead of complaining about it, you have to analyze it and draw your conclusions. Now, my conclusion is that when it comes to multilateral institutions, such as the UN or the WTO, or the ICC.
That is the sort of full scope of what happened on Friday and sort of transition this idea of the abandonment of Europe by America in theory into real practice and what that means. What that means, we already know, is huge volumes of money. That means new mechanisms of funding for defense build-out potentially. We know that at the EU level, they're looking at different options from sort of expanding the mandate of the European Investment Bank to potentially repurposing funds from other European programs. And of course, the sort of holy grail in there, the question of sort of joint debt in the name of defense potentially, or other sort of workarounds that work around that. But there's also this question of architecture of defense and also security guarantees. If the United States is unwilling to give security guarantees right now, what can Europe put forward? This is sort of what Keir Starmer has put forward. Macron has talked about boots on the ground in the past. But every single leader that I have spoken to and lawmakers that I've spoken to in Germany, they're very reticent to sign on to anything that would involve, their own troops, even after a sort of ceasefire or peace deal. Because the question is, what are those troops there to do? Are they just sort of there to observe the conditions are being of a ceasefire are being respected, and if there are starting the ceasefire to end, if there are sort of fire, there's firing back at Russian troops, is that something that European leaders are willing to put their neck out on the line? I think that fundamentally this still comes down to potentially they would be if there are American security guarantees, and that is really what the Trump administration so far has been unwilling to put forward to the Europeans, and this is of course the sort of exact sort of center of that blow-up we saw in the Oval Office on Friday.
Oliver, away from what the spending agreement might be as Europe as a whole, where you are usually based in Germany, the reports are huge levels of spending, something like 400 billion euros for defense, up to 500 billion for infrastructure. George Saloveylos at Deutsche Bank talking about this being levels we haven't seen.
Potentially the order of hundreds of billions of euros that the Germans are looking at right now. The first time they set up such a fund was in the initial invasion of Ukraine. It was 100 billion euros. But I spoke to the top general in the German military a couple of weeks ago, and he said that basically that 100 billion only started to begin to fill in some of the potholes that the German military had. This is a nation, though it is the biggest in Europe, that has chronically underinvested, as with the rest of Europe. And again, we go back to that conversation that I had with the Norwegian prime minister that shares a border with Russia. They're only going to hit 2.16% of their GDP on defense spend. So again, there is this idea that, they need to move out of the rhetoric and into the reality. We're starting to see it a bit with the Germans. And if the Germans unlock that, I think it could really go a very long distance. The question is, will they be able to do something at the EU level? That still needs to be discussed.
Oliver, thank you so much for leading our coverage for this. That is Bloomberg's Oliver Crook in London. The Washington Post reporting this morning that the Kremlin says that the U.S. is aligned with Russia's vision. The president appears closer to siding with Russia than Ukraine, but the noises from Congress are perhaps different.
I think Vladimir Putin is an old-school communist, a former KGB agent. He's not to be trusted, and he is dangerous. The way I view this is that China, Russia, Iran, and North Korea are engaged in a new Axis powers, and they are not on America's side. Let's be crystal clear about that.
Let's bring in Bloomberg government reporter Kate Ackley in Washington, D.C. Kate, we just heard from Oliver Crook there on what the Europeans are doing, trying to come together. Is there any sense that Trump might revisit this, or a broader support from
one senator who's been quite supportive of Ukraine come out Friday after that dramatic interaction in the Oval Office that we saw with Trump and Zelensky and J.D. Vance, the vice president. And we saw Lindsey Graham criticize Zelensky and really sort of take Trump and Vance's side.
Yeah, and over the weekend he said, he called it a complete and utter disaster, and he said he should resign, appoint somebody else. But let's talk about perhaps the way back to rapprochement. Zelensky over the weekend expressing gratitude to the U.S. And thanking Trump, something which was a sore point on Friday. What is the political will for the U.S. to re-engage? Keir Starmer calls them a very firm ally, the United States of America, fully engaged.
Well, before that Oval Office address or press conference or whatever meeting, whatever you call it, Zelensky had been on Capitol Hill and had a quite warm reception with senators. I think there is still a lot of support in conversations with lawmakers and staff on Capitol Hill. Zelensky did signal over the weekend that he would be ready to sign the minerals deal, maybe do a little bit of a do-over or get back into the finding a peace deal. So I think, certainly it's possible, but that was quite a dramatic moment, and it did signal this shift that has come with the Trump administration's approach to foreign policy and a number of things.
Kate, just quickly, before we let you go, Tuesday, we get the 25% tariffs, Canada, Mexico, an additional 10 from China. Any signs that they may or may not go on?
Well, these relationships with our trading partners, U.S. trading partners. So a lot of eyes will be watching how this comes out.
Yeah, I think Howard Lutnick, the Commerce Secretary, described it as a fluid situation. Let's see what fluidity brings. Kate, thank you very much. Kate Ackley there of Bloomberg Government. Coming up in the show, we'll set you up for the week ahead. The proposed tariffs, they take effect. Will they? President Trump speaks to Congress. The jobs report, all on the slate, right here on Bloomberg Brief.
Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
It's a multi-trading
day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Let's get you set up for this very busy trading week. Proposed tariffs on Canada, Mexico, additional ones to China are due to take effect tomorrow on Tuesday. On Tuesday, we're also going to get President Trump delivering a speech to a joint session of Congress. We're going to wrap up the week with U.S. jobs report on Friday. We will also hear from Chair Powell on Friday, too. Manis.
A heck of a lot to absorb, Danny. Some individual names. Capri Holding rising as they come closer to a deal with Prada. That's to buy Versace. People familiar with the matter say that they've agreed a price of $1.6 billion to do the deal. MicroStrategy, lovely boost on the whole crypto world yesterday as President Donald Trump once again talking about his plan for a strategic crypto reserve. And Chipotle, you've got Morgan Stanley upgrading the stock to overweight. Analysts say the stock's weakness is a buying opportunity and an excellent tech play.
Now I'm hungry.
Walk in and we close out business tomorrow. What have we got? Is it 25% on Mexico and book in and we close out business tomorrow? What have we got? Is it 25% on Mexico and Canada? Will Mexico and Canada come on side with the United States of America, as Scott Besson kind of floated over the weekend?
And when will risk actually respond? We rallied by more than 1.5% on Friday. We're heading higher in futures this morning. There's a lot of people in this market who don't believe that the tariffs will actually happen. We'll see if any negotiations take place beforehand. All right, that's it for your brief surveillance. We'll take the reins from here.
Has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
These high momentum stocks have started to pull back pretty significantly, and we think it's just an unwind of that crowded positioning.
I don't know that it would necessarily be a bad thing to see that broadening out in terms of performance.
Some taking of gains is to be expected after such a strong fourth quarter, all to be expected and could also be attributable to seasonals.
A key pillar of this bull market has been the resilience of corporate earnings.
If you can't see earnings broaden out, then it's a huge problem in the market today.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started live from New York City this morning. Good.
Was that the trade deficit for January for the United States surged by 25%, with the expectation that a lot of companies are trying to get ahead of these expected tariffs, bringing a lot of imports. Guess what? Boosting Chinese manufacturing production in the period of time.
Howard Lutnick, President Trump's Commerce Secretary, went on Fox over the weekend and said it's a fluid situation, meaning obviously talks are ongoing and there could be potentially come to an agreement between both these countries to not have the tariffs go in place. But then he goes on to say there are going to be tariffs on Tuesday on Mexico and Canada. Exactly what they are, we're going to leave that to the president and his team to negotiate. So it sounds like tariffs are going on, but maybe the level might be toned down.
And then we've got reciprocal tariffs in early April. So a month from now, Europe, believe it or not, has bigger problems. When the defense sector rallies this hard, you know something has gone wrong in diplomatic talks. Rheinmetall, BAE Systems, up by more than 10%, a double-digit rally. Check out this from Reuters over the weekend. Economists advising the parties that will likely form a new government in Germany. They estimate around 400 billion euros are needed for the defense fund and 400 billion to 500 billion euros for the infrastructure fund. That is one heck of a story out of Reuters.
And frankly, it would account for a huge proportion of Germany's GDP and would be a complete reversal of what we've seen over the past 80 years since 1945, when the U.S. essentially provided the defense mechanism for the entirety of Europe. Let's put this into perspective. U.S. presidents, going back to Nixon, have wanted the European Union to spend more on defense, and they haven't. There is a real question about whether what happened on Friday will galvanize Europeans to actually pull together some...
Of historic proportion. We begin the program this morning, and good morning to you, with a rupture in transatlantic relations.
Mr. President, with respect, I think it's disrespectful for you to come into the Oval Office and try to litigate this in front of the American media. You should be thanking the President for trying to bring an end to this conflict.
Have you ever been to Ukraine that you say what problems we have?
I have been to...
Come on.
You're not in a good position. You don't have the cards right now. With us, you start having cards. Right now, you don't. You're playing cards. You're playing cards. You're gambling with World War III. And what you're doing is very disrespectful to the country.
Have you said thank you once this entire meeting?
A diplomatic breakdown in the Oval Office fueling urgency in Europe as leaders there spent the weekend looking to build a so-called coalition of the willing.
We are at a crossroads in history today. This is not a moment for more talk. It's time to act. The UK is prepared to back this with boots on the ground and planes in the air. Together with others, Europe must do the heavy lifting.
Our team coverage begins right now with Bloomberg's Tyler Kendall in Washington, D.C. and Oliver Crook over in London. Ollie, did we make any progress at all over the weekend?
I mean, I think to a degree, Jonathan, I mean, it's sort of, I think that when you see the reaction in the market, at very least, you start to see that, the market is taking this very seriously. We thought, a lot of this rally has already been priced into Rheinmetall, all of these companies catching a two-digit percentage bid this morning in the sort of promise that things are going to change here in Europe. And for the European leaders, they talk about this sort of coalition of the willing. What they have not yet answered is the coalition of the willing to do what, right? One is going to be the money component of this. The EU turn fire on Russian troops if, in fact, that ceasefire is broken. And that is a very different fire on Russian troops if, in fact, that ceasefire is broken. And that is a very difficult thing for a European leader to sign up to, particularly without those American security guarantees, which really hang at the center of all of these conversations.
Tyler, President Zelensky said over the weekend when he was at that summit in Europe, if the U.S. president invites him for a constructive dialogue to solve real problems for serious issues and real decisive actions and answers, I will arrive. The question is this White House prepared to extend another invitation?
Well, Anne-Marie, the biggest question on the table here is something that was consistent from Trump administration officials over the weekend, which is that they do not want to discuss any part of these security guarantees at this moment. And it was interesting to see some of the rhetoric come out of senior administration officials, right? Treasury Secretary Scott Bessent, for example, telling CBS News that at this moment, the, quote, sequencing of negotiations is just totally thrown off. The White House had wanted Ukraine to sign this critical minerals deal, and then they would move into brokering that longer peace deal. But at the moment, Scott Bessent is suggesting that that economic cooperation deal could be off the table depending on how Zelensky responds. You read his response right there. The Ukrainians saying that they would go back to how that deal was currently negotiated, and Zelensky would come back to the White House if invited for serious talks. But at least one European official is telling Bloomberg News that in private conversations, this White House is looking for a public apology from Zelensky, something so far he has steered clear of. Instead, Anne-Marie saying that he has a right to have an open dialogue about the future of his country.
Tyler, Ollie, to the both of you, thank you. Let's extend the conversation. Joining us now, Norman Rule.
It may be that Zelensky's ministers or some intermediary group signs that when that comes about, because the Trump administration does see that an economic relationship is the first step to building a security agreement. I don't think it's going to happen soon. I think Europe is going to push for this, and events will be one of the pressures for the Zelensky government.
Norman, over the weekend, I was told by a senior U.S. official that the mineral economic agreement is off the table for now. That key point, you think at the end they want to get to it. What kind of timeline are we talking about?
Impossible to say, because this is now a political issue. It's a highly partisan issue in the U.S. We've not had an issue of this, a foreign policy issue of such partisanship since the Iran nuclear deal. As I say, events are going to dictate the pace of some of this. But in the end of the day, the Ukraine must have U.S. support. The U.S. will not provide that support without some different type of arrangement with Ukraine that involves economic compensation for our expenditures, and Europe wants Ukraine to maintain this tie to the U.S. So I think you're going to see a process, but it's impossible to predict when this will come to a conclusion.
Can an economic agreement act as a deterrent to Putin in terms of militarily?
It depends. an economic agreement that is only something on paper, that is not fleshed out, that doesn't involve a significant U.S. commercial presence inside of Ukraine, will not be a significant deterrent to Vladimir Putin. But if there are broad deterrent to Vladimir Putin, but if there are broad economic interests and these economic interests are important to the U.S. economy, then Russia will have to take that into consideration for its moves. Now, there's a reverse to I've been in contact with a number of interlocutors overseas over the weekend, and it is not lost on them that within the United States we have a very contentious, hyper-partisan environment where each side will seek to take advantage. But as I have noted in the past, the same people who complain that the Trump administration is dealing with Russia in the past called for a reset with Russia, in the past that called for negotiations with the Iranians, who have certainly killed more Americans than Russia in recent years. We're dealing with untrustworthy, bloodthirsty actors in Russia and Iran, but each side tends to choose their dictator of choice. In the end of the day, we've got to look past that. And Russian propaganda will exploit this fissure within the United States. It'd be easy to say ignore Russian propaganda because they're playing against us and their domestic audience. But you will often hear reporters say Vladimir Putin is boasting, et cetera, et cetera. That's part of their effort to further increase the pressures within the United States.
Hey, Norman, good to hear from you. As always, sir, the former senior U.S. intelligence official, Norman Rule there. The latest on Ukraine, the United States. I'm hopeful, call me crazy, that maybe this brings the United States and Europe closer together and doesn't push them further apart. This came from the Polish Prime Minister over the weekend. Europe awakened, Europe understanding its global potential will be America's most desirable ally. There was a recognition of a call for action, I think, over the weekend by some European officials.
Absolutely, and you already saw them come to the White House. Emmanuel Macron, Keir Starmer, both Saudi Arabia and Egypt criticized the move, saying aid should not be used as a weapon for collective punishment. Meanwhile, Hamas rejected a U.S.-led proposal to extend the truce until mid-April. Pope Francis is in stable condition in a Rome hospital. The Vatican said yesterday that the 88-year-old had a tranquil night, but his prognosis remains reserved. The Pope has been hospitalized since February 14th and has been battling pneumonia in both lungs. And that's your brief. John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. I'm next on a program approaching the tariff deadline.
We could either see a ratcheting up in tariffs, or if our trading partners want to remedy what has been unfair trade, then we could see the tariffs come off.
A conversation up next with Laurie Calvasina of RBC from New York City this morning. Good morning.
All things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
What a week we've got coming up. Equity futures going into it positive by 1/3% on the S&P 500. Payrolls on Friday. You'll hear from Chairman Powell as well. And a tariff deadline in the next 24 hours. Equities just about positive. Bonds lower. Yields higher at 5 basis points. The 10-year 425.76. Under surveillance this morning, approaching a tariff deadline.
There's a series of tariffs. There's March 4th, and then there are there's the big tariff program that's going to be outlined on April 2nd by Commerce and USTR, and that's the president's notion of reciprocal tariffs, and that's going to be very path dependent. So we could either see a ratcheting up in tariffs, or if our trading partners want to remedy what has been unfair trade, then we could see the tariffs come off.
So here's the latest this morning. President Trump is on the
net approval as a sort of a gauge of the political vibes, and I do that because it's been tracking the S&P post-election day the same way the polling data was in 2023 and early 2024. But that is also starting to stumble, even though, to be fair, it's still, pretty strong and stronger than where it was. So we're seeing this on a lot of different levels. I would say, the corporate vibes have been a little bit more resilient based on that Conference Board CEO confidence survey. But even there, if you look at the tenor of reporting season, we've seen uncertainty really start to eclipse optimism. And if you even dig into that CEO confidence survey, employment expectations are starting to shift in a negative way. And the consumer survey is also sussing that out. So I think that we are in the middle of, kind of the early stages of a sentiment shock. That's the only way I can describe it right now.
A sentiment shock that hasn't driven a 5% correction, 10% correction just yet.
We're so on the cusp of that 5% number, and I don't consider it to really be a true pullback that does anything to significantly remove froth unless you get into that 5 to 10% range. That's sort of the first tier of fear on sort of our fear scale, which we've been talking quite a bit about the last few weeks. So we're getting close, to sort of being in that technical pullback period, but we're just not even there yet. Unbelievably, I have never seen the AAII survey collapse like this without a big move lower in stock prices.
One of the reasons why is because consumer confidence, or at least confidence among CEOs, has continued to remain strong. What has your takeaway been from some of the earnings call and the guidance or lack thereof from CEOs?
Yeah, I mean, it's interesting. I haven't crunched the numbers for February yet, but through January.
CEOs.
Yeah, I mean, it's interesting. I haven't crunched the numbers for February yet, but through January, at least, we had not seen a big spike in either downward guidance or upward guidance. And if you went back to last year in the calendar first quarter, there was a big spike in downward guidance. So companies, at least, you're not going to see anything significant or meaningful in a long-lasting way. Like maybe you get a few weeks, but you're not going to get anything with any duration. I've been hearing that for weeks. If I think back, though, to my marketing last week, and I was talking to U.S.-focused investors, I finally started to hear for the first time the idea that this tariff as a negotiating tool is too consensus. And so I was really starting to finally see last week U.S. investors question whether or not there was wisdom in that consensus and starting to come to terms with the idea. And I think that's driven us to that kind of 4.6, 4.3% dip.
So you think that the dip that we've seen so far is on basically hedging that there could be these tariffs that are implemented? How much more downside do you think that there would be?
So if you think about a big shopping mall, right? And you're at the top of the shopping mall, you have to take the escalators down, you kind of get to one level, you look around, and then you decide if you're going to keep going back down. I think that's how I think about these different tiers of fear in equity markets. So 5 to 10%, again, is sort of a garden variety pullback. We have had plenty of those since 2022. What I've noticed is that when you get to sort of that 8, 9-ish% type mark, that's when you really start to see true fear come in. One of my valuation models suggests if we have sticky inflation, 10-year yields at 3.5%, and a couple Fed cuts, 5,600 is a reasonable estimate of where the S&P should end up the year. That's close to that 10% mark. So I think that's the first battleground. After that, you have to go back to pre-COVID, post-GFC, I think, to get a good read. If you look at the 2010, 2011, 15, 16, 18 periods, we saw declines of 14 to 20% in the equity market. These were periods where economic recession was truly feared, did not end up being manifest, or some sort of systemic issue. So think U.S. debt downgrade, European sovereign debt crisis in 2018. We had the trade war. We had Fed concerns on the balance sheet. And 15, 16 was the industrial recession that didn't spread because of consumer resilience. I think the risks of that second tier of fear are rising. After that, tier 3 would be a recession or a war. Tier 4 is a major crisis. Tier 3 is, like 25 to 30%. Historically, major crises tend to be worth about 50%. I don't think we're looking at tier 3 or tier 4, but I do think that kind of 14 to 20% risk is rising. Not my base case, but that would be sort of the next level.
Trade is global. So if things turn challenging, it's going to happen everywhere. Do you think the U.S. is the most prepared?
I think that the U.S. companies, you know, and I give them credit for that. And when I look at that CEO confidence survey, they have been through a heck of a lot in recent years. And really post-GFC, they have refined their crisis management skills. We saw that come through during the SVB crisis, right? And you heard companies really talk about that. Even in the 2018 trade war, while we still had that 20% peak to trough drawdown in the back part of that year, they ended up managing through that pretty well, and we didn't have a massive hit to earnings. So I do think that we get some resilience there, but I do think, you know, we're sitting in the U.S. at valuations that have hit ceilings, and they're starting to sort of retreat. We have seen various, you know, the vibes we've talked about weakening. CFTC positioning data hit a brand new high late last year, just like it did in 2018. So we're not in a great position in terms of positioning and valuation in the U.S., and that I think that has started to make some of this rotation out of U.S. equities into European equities start.
Thinking about what happened back in 2018, just when does the Trump put actually kick in?
Well, I think 2018 has been a great example in that, you know, there's sort of this view, right? And I don't completely disagree with this view, right? Because I do see 55, 5,600 as a battleground for other reasons. But, you know, I've been hearing all year, in addition to tariffs are never really going to happen, the idea they're not going to let the market go down that much. Well, I'll tell you what, John, I was starting to hear that question last week as well, right? And some of the investors, and again, I talk mostly to equity folks, but they're like, well, maybe they're just focused on the bond market, and maybe the bond market is the put. I have been bringing up, though, 2018 all along as an example of when economic growth concerns come on the table, things may not be entirely under your control, no matter how much you would like to control them. And that's what we really saw was fear of the balance sheet unwind, too many hikes, you know, kind of the idea that the Fed wasn't listening to markets and watching the economy properly, intersected with the unknowns of the paradigm shift from the...
The business.
Jay Williams.
You're the asset, but how do you become the
business. Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never.
Ready? Go.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Strong finish to last week, strong rally into the weekend. Not enough to erase a weekly decline. 2 weeks of losses on the S&P 500. Equity futures this morning up by 0.4%. On the Nasdaq 100, higher by 0.5%. In the bond market, what a run. We've added it up for you every single week, week on week. 10-year bond yields in America down for 7 consecutive weeks, the longest run since June 2019. A small bounce this morning in the context of a much bigger rally in the bond market. Yields are higher by just 5 basis. They estimate around 400 billion euros are needed for the defence fund, 400 billion to 500 billion euros for the infrastructure fund.
So what I'm actually looking for is some sort of prediction of what this would mean if markets were taking this truly seriously. Right now, there's sort of a handicapping going on in markets, but George Saravelos of Deutsche Bank came out and said there are too many cross currents right now to hold any kind of conviction call on euro dollar. They are backing away from their short euro call. I am curious how far 10-year yields in Germany would have to climb if people truly believed they were about to borrow $1 trillion for defense and infrastructure spending.
That would be a monster shift, not just for Europe, for Germany, but for the world, and a global bond market for that matter as well. On our radar this morning, European leaders considering a 200 billion euro boost to defence spending, a summit over the weekend looking to shore up support for Ukraine in the aftermath of President Zelensky's meeting with President Trump.
So what I see right now, reading between all of these meetings, between the blow-up on Friday and what happened in Europe over the weekend, is one key fact that they do not agree upon on both sides of the Atlantic, which is that Trump says he does not want to talk about security agreements until there is a ceasefire and peace, until they get to the negotiating table. Ursula von der Leyen left that meeting over the weekend and said, we need to talk about security agreements now to give Ukraine an upper hand at the negotiating table. So when it comes to the security agreement, Europe and the United States are not aligned.
That said, where's the leverage? And I keep asking this because ultimately any deal needs the U.S. backstop. And then on the flip side, you have Europe, at least you've got the U.K. and France trying to put together some sort of deal with Ukraine to present to Putin themselves and get some sort of dialogue just going so that they can bypass the United States. It's a really interesting dance. I am very curious how this ends up. And
What time did you watch that exchange Friday afternoon?
Probably about 6.
What do you think broke things down?
Honestly, my personal opinion, which nobody really wants, but it seems like there's a lot of animosity heading into this meeting that was personal on a couple of sides. It felt like that from the body language. It seemed like Donald Trump was trying, although irritated about the lack of suit. And J.D. Vance, I think his involvement and the fact that in the past these two men, J.D. Vance and Volodymyr Zelensky, have had bad blood, his involvement seemed to ignite an unstoppable need to respond.
I was surprised by a lot of things, but I think one of the biggest surprises that I had, because these things happen behind closed doors as well. And there was reporting from a couple of years ago that President Biden got very frustrated on the phone with President Zelensky as well, behind closed doors. It's the first time we've seen this kind of thing on TV, so everyone's shocked. I was more surprised that Zelensky allowed this to happen in English, when he's been so careful with some of the interviews he's done, including the one with you, where he chose to conduct the interview in Ukrainian. And if you saw the interview that he put on later on with Fox News, later on that afternoon, he had a translator that he had to pause mid-interview, live on TV, and get clarification as to what the interviewer was actually asking him. You didn't see any of that in this meeting at all. And I wonder how much was actually lost in translation in that moment, because if you saw him subsequently over the weekend, speaking to the British and European press, everything was in Ukrainian. You know behind closed doors how long they take when they have a bilateral meeting to choose very specific words and make sure that everyone understands where we are. That was not the moment to be engaging in English in the moment in front of the American media in the way that things transpired.
When you sit down with Zelensky, and I did over the summer, if you're asking something where he feels confident enough to talk about in English, he will. But for the most part, especially if something is controversial or he wants to be very precise with his words.
Tomorrow, the only thing that's going to matter is this deadline right here. The United States set to double the tariff rate on China to 20%, going into effect tomorrow. Chinese state media reporting the country is weighing retaliatory measures on U.S. agriculture and food products, with President Xi preparing to unveil a stimulus plan later on this week. It's amazing that we've got these other tariffs elsewhere, 25% Canada, Mexico, that's taking all the attention away from the fact that we're probably going to get, in the minds of many people on Wall Street, an additional 10% tariff on China.
Absolutely. When I speak to officials, and I've been talking to them throughout the entire weekend, basically, try to understand where we are in these negotiations, no one's talking about China, because everyone just pretty much assumes the tariffs are going through when it comes to China. I am reminded, though, at Goldman Sachs' note over the summer, and they were totally right when it comes to stimulus out of China. They were waiting for the bazooka to see what Trump was going to do when it comes to trade, and they were absolutely right. We're at 25%, and additional to already what is in place when it comes to Chinese imports.
Our next story is on our radar. I'm not sure if it's on anyone else's given the news elsewhere, but we should be talking about this. President Trump announcing plans for a U.S. strategic crypto reserve set to include undetermined amounts of major tokens. The announcement sending cryptocurrency prices soaring, recouping some losses from the asset class's worst month since 2022.
I actually think this is a big deal.
Agreed.
I actually think that we should be talking more about this, including tokens like XRP, SOL, and ADA, which are less mainstream than, say, Bitcoin and Tether. It has actually ignited the ire of people within the crypto universe who don't want the legitimacy placed on these. And let's just put into perspective that the only country that has really engaged with this type of crypto experiment has been El Salvador, and it did not end well. And I am just wondering, at what point, to what end, is this coming on now and at a time where there's incredible volatility? And we've seen those losses since the inauguration.
We're seeing that rally this morning off the back of some of those headlines. Let's turn to this story. A tariff deadline, fewer than 24 hours away. Tobin Marcus of Wolf Research writing, if Trump follows through with his threats, it increases the risk that he'll go big with his April 2nd reciprocal tariff policy. Tobin joins us now for more. Tobin, I guess the first question, will the president follow through on his threats?
In some ways, the setup looks exactly the same as it did in early February, when I was fairly confident that he wouldn't end up following through, and at least not doing so with long duration. I have to say I'm less optimistic this time. I think he's been, quite resolute that he's going to do something. Even over the weekend, the comments from Commerce Secretary Lutnick that people are taking encouragement from, pointed to some flexibility in the rate, but still, kind of doubled down on the likelihood that they would go ahead and do something. So it's hard to have total confidence, but, I think it's also impossible to write off the risk that he'll actually go through with it.
Scott Bessent, the Treasury Secretary, Tobin, said to David Weston on Bloomberg TV on Friday that the Mexican government made a proposal matching U.S. on China tariffs, and then said it would be a nice gesture if the Canadians did it also. Is that a big enough concession to potentially put another pause on these 25% tariffs?
Conceivably, the tariffs have never really made a lot of economic sense for the U.S. In the Canadian case in particular, they are, way out of scale with the actual problem that we have in terms of migration and drug trafficking, which is obviously much more of a Mexico problem than a Canada problem. So, it all comes down to Trump's assessment, I think, of whether or not he's kind of accomplished his political goal and just take this sitting down. So, I think there absolutely is upside to the rates if things go really badly. I think we saw, as you were just talking about in the confrontation with Zelensky last week, when things get personal, I do think there's a risk that things can go south in ways that don't totally line up with either side's objective interests.
Wait, Tobin, can you develop that, please? This idea that actually what happened on Friday will influence the likelihood that these tariffs go on tomorrow?
I don't know that there's a direct influence. I think it's more just a case study. As Trump himself said in the Truth Social post that he put out afterwards, it's telling what can come out under emotion. If there is an actual move to go forward with these tariffs, even at a reduced rate, like the likelihood of tit-for-tat retaliation is definitely something that we need to worry about. And if we're locked into a confrontational stance with these two countries, you can't rule out the possibility that, sort of interpersonally things go wrong and we find both sides kind of backed into their corners.
Tobin, tomorrow we also have a joint address to Congress from the President of the United States, which basically is a different way of saying we're going to have a State of the Union. What are you expecting?
Yeah, they've done very little in terms of previewing, even talking to Republican sources on the Hill. There's not a lot of rumors and gossip going around about what it is that he might announce. My guess would be that it's mostly focused on accomplishments and that we have kind of a promises made, promises kept theme where he points to the massive amount of activity that's already gone on, much of which they feel very good about. I'm sure they'll have some, tidbits of news. It would be uncharacteristic to go into this and have nothing that's new and headline grabbing. But I think a lot of it is and have nothing that's new and headline grabbing. But I think a lot of it is going to be, rehearsing and framing up the totality of what they've done so far.
Hey, Tobin, appreciate your time as always, sir. Thank you, Tobin Marcus of Wolf Research. Things could look very different tomorrow on the trade front, that's for sure. Let's get you an update on news elsewhere.
Closer for a deal to buy Versace, agreeing to a price of nearly 1.6 billion euros. Sources say talks with Capri are progressing after initial due diligence didn't find any risks, and the deal could be finalized in March. An acquisition would allow Prada to create a larger Italian player to compete with luxury rivals LVMH and Kering. And that's your brief, John.
Danny, thank you. Remember the snoozy Biden years? That would have been a top story.
Would have been a top story. Yeah, Forza Italia. They're basically, this could be the answer to carrying an LVMH out of Milan.
Anti-competitive issues, entry-level handbags and all that stuff.
Yeah, sort of mid-level and high-level luxury.
It's a very different time. Up next on the program, risk on the horizon.
Today, what is the risk is that if you look out over the horizon, in an environment where policies are likely to be inflationary, I think there's going to be demand destruction.
Up next on the program, Ajay Razadaksa of Barclays from New York City. This is Bloomberg.
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Anticipating the shocks from higher prices today. What is the risk is that if you look out over the horizon, in an environment where policies are likely to be inflationary, we have consumers that are seeing a lot of prices and paying close attention to all of these prices. And as a result, they're pulling back on demand. I think there's going to be demand destruction.
So here's the latest this morning. Investors bracing for the February payrolls report due on Friday after a slew of soft economic data. Ajay Rajadasa of Barclays writing, if the drumbeat of negative news picks up, including in the payrolls print, investors will have to take a scenario that seemed unlikely at the time of the election. Seriously, could the US economy, under a Trump administration, be headed for a recession over the next few quarters? Ajay joins us now for more. Ajay, good morning to you, sir.
Good morning.
Okay, so it's not your base case, but the odds aren't zero, and have the odds just gone up?
They have gone up. I mean, it's not something that I would have said it's extremely unlikely 2-3 months ago. But a couple of things have all come together. The first is the president seems to be far more serious about tariffs than, was consensus in November when he won. And the second is we have had a slew of weaker data in the United States in the last 2 or 3 weeks. Personal consumption's slowed down, income slowed down, retail sales were weaker. The Atlanta Fed's GDP tracker has a negative 1.5% for this quarter. That's overstating it, but things are starting to move in the wrong direction.
If he's far more serious about tariffs, Is he far less sensitive to declining equity markets?
It seems that way. You notice this time around, as opposed to his first term, the president's really not referenced the equity markets at all. Even 2 weeks ago, when we are near an all-time high. So what they seem to be talking about is the 10-year treasury rate. Behind the U.S. is the U.S. consumer. And the reason that the consumer has tailwind is just because wealth has gone up so much. Household wealth is up over $50 trillion over the last 4 years. I mean, these are just very large numbers. And so you know what the U.S. consumer is doing? He's spending every single dollar he takes in. But if equities first pull back 15, 20%, then I think that starts to fade. If no job cuts kick in, you are right. You would need a lot of things to all go wrong simultaneously. I don't think it'll happen. But the odds are a little higher than before.
So then put into perspective the idea that we're seeing the economic surprise index run by Citi roll over to the lowest, to the most negative going back to September. The fact that we are seeing an increasing number of sort of tepid economic signals. Do you discount that as normalization? Or at what point do you see that as something of a weakening trend?
No, I think it is a weakening trend. I just don't think right now it is anywhere close enough to get you to a recession. You would need one final shoe to drop, which is these job cuts that the government is doing. Last year, for example, the U.S. economy created 2 million jobs. If we actually let go of close to 1 million people, government, related to government, et cetera, that takes away 50%. If the equity markets fall simultaneously by, say, 15, 20%, together, that would get you uncomfortably close to a recession.
Do we see those DOGE job cuts in the federal government show up in Friday's payrolls report?
No. So the survey week was before these started. And remember, it'll take time. So last year, the U.S. government started. And remember, it'll take time. So last year, the U.S. government hired net 50,000 people at federal level. But about 130 to 140,000 people left voluntarily, and those were replaced. If you don't do both, then that itself is about 200,000 jobs going away. And then there's about 200 new tax cut. That itself will add about $4 trillion to our deficits over the next decade. What the House is aiming for is to add $2.8 trillion in deficits, if you look at the budget resolution. And the numbers are the numbers. Beyond a point, they cannot be fudged. So right now, the most that Congress is trying for is a mild fiscal drag over the next 10 years, because I don't think they have the votes for large new tax cuts.
Does this mean that on some level, especially if this is an administration that's targeting a lower 10-year yield, there needs to be slower growth on an ongoing basis to finance a deficit that seems much more structural in the United States?
You have to be careful about that, because growth slows down too much, and you know what happens? Tax receipts fall out of bed. It doesn't improve your deficits. So I don't know that is something that, look, no administration is going to say that we want much weaker growth because, look, that gets your mortgage rates down. No one in the right mind is going to say that. I don't think the administration is especially trying for that either. It's just that they are no longer focused on the equity markets as a sign of success.
How brutal are the arguments at Barclays right now with Venue at 6,600? Are you fighting yet? You don't sound bullish at all.
I'm going to have a conversation with him. Let's put it like that.
Have you had that conversation yet?
To be fair to him, data has shifted a lot in the last 3 weeks.
Yeah.
Part of it is, 2 months ago, if you had told me that we are going to impose 25% tariffs, and then you would have said on Canada, that would not have seemed realistic. And yet here we are, a couple of days away. So the facts on the ground have shifted. And if that, to quote Keynes, then our views might shift.
Things have changed. We'll look for an update from Venue maybe in the next couple of weeks. Ajay, it's good to see you.
Likewise.
Thank you, sir. The latest from Fargo, Mark McCormick of TD from New York City. You're watching Bloomberg TV. Fargo, Mark McCormick of TD from New York City. You're watching Bloomberg TV.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they build things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable.
Moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
That we have the risk that we will both have higher prices and less sales, the more markets should be preparing themselves for the risk that a stagflationary scenario might be playing out.
I'm not that worried about inflation and your famous last words.
There are concerns, and there should be concerns about longer-term structural inflation.
The Federal Reserve is clearly in wait-and-see mode.
Unfortunately, I think the Fed is going to be too reactionary in this environment, and that is always going to be too late in this environment.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The second hour of Bloomberg Surveillance.
Talking about this as a negotiating tool. Even members of Trump's administration talk about this as a negotiating tool. Even members of Trump's administration talk about these as negotiating tools. And yet, Lori Calvasina said an increasing number of clients have been asking her about it and are saying maybe they're not taking it seriously enough, and maybe they're going to be offsides when it comes to market valuations.
The Treasury Secretary on Friday said if Trump's favorite word is tariffs, his second favorite word is reciprocal. So you can see the direction of travel when it comes to how they are negotiating, especially when it comes to those April 1st, April 2nd tariffs. When it comes to Canada and Mexico, it's a little bit hard to understand where they're going because Howard Lutnick yesterday, the Commerce Secretary, said two interesting things. Fluid situation. Well, what does that mean? Things are changing. They could change. But then he also said there are going to be tariffs on Tuesday on Mexico and Canada. Exactly what they are, we're going to leave that for the president and his team, which, by the way, Howard Lutnick is part of that team, to negotiate. So it sounds like they're going on, but maybe they're just going to be a little bit less.
Throw Europe into the mix as well. Some big moves over in Germany. In the debt market, Bunds lower, yields higher, up 10 basis points on a German 10-year. And in the defense stocks, in that sector right now, you're seeing a monster rally on Rheinmetall, on BAE Systems. It looks like that rupture in the Oval Office, that diplomatic breakdown on Friday, could spark a big change in Europe.
Yeah, maybe that's the kick in the pants to actually get them to spend on their defense spending. You mentioned the Reuters report earlier that came out over the weekend with something to the tune of close to €1 trillion in spending from Germany, from the joint European Union as a result of needs to beef up defense spending as well as infrastructure, A question of whether this is realistic, given the appetite, given the lack of political leadership right now in Europe. At the same time, people are taking it seriously enough that you're seeing moves in the market. And I wonder if this actually could boost some of the
Equity futures here positive by 0.5%. A lift in the equity market. Bond yields a little bit higher. The euro stronger as well, and lots to talk about on the continent in just a moment. Coming up this hour, we'll catch up with Mohammed Al-Owen of Queen's College, Cambridge, as investors brace for a busy week ahead. Chris Harvey of Wells Fargo on the perfect storm against momentum stocks, and Mark McCormick of TD as Secretary Besson pitches Fortress North America. We begin this hour with Stock Steady as investors prepare for a week full of event risk. Mohammed Al-Owen of Queen's College, Cambridge, writing a heavy data week on tap for the US with a monthly jobs report, lots of speaking engagements for policymakers, including Treasury Secretary Besson and Fed Chair Jay Powell, and the latest on tariffs and Doge. Mohammed joins us now for more. Mohammed, welcome to the program, sir. Where to begin? I think we start on Friday and the rupture in transatlantic relations and the breakdown in the Oval Office. When you saw that, and when you think about the consequences it could have for the economic picture in Europe, for military spending, and for what it could mean for financial markets too, Mohammed, what are your thoughts at the moment?
Thanks for having me, John. My thoughts is that feeds into some existing themes, both top-down and bottom-up, and intensifies them. So top-down, we've had issues of fiscal realignment, and that's going to feed into fiscal realignment, including putting pressure on the debt brake in Germany, including the question of how does it interact with what Doge is doing in the US. Secondly, it feeds into the energy market and how we think about the energy market. And third, it feeds into the realignment of the global order, that also has a trade element to it and a currency element to it. So you have all these top-down factors that are being amplified. And then the bottom-up factor that's being amplified is defense. And we are seeing significant has come in. It has hit the ground running, if not sprinting. And if you're a business, it feels like you're trying to drink from a fire hose. There's energy issues, there's immigration issues, there are trade issues, there are public sector issues, including public sector contract, there are regulation issues. So you're trying to absorb all this. And what we've seen is sentiment has come down and there's been a wait and see attitude, because most of these things impact both your income and your expenditure. So it's really hard to figure out how all these things are going to play out. Then there is the international relations side of it, your trading side of it. So the worry that I have is that the lack of ability by the public sector to absorb all this results in a wait-and-see attitude. That wait-and-see attitude comes at a time when we already have a bit of a whiff of stagflation going on. And next thing you know, people start questioning U.S. economic exceptionalism. And if they do, two things happen. You start questioning the only reliable engine of growth for the global economy, and you start questioning the shield that markets have had against all sorts of geopolitical and political aspects.
That's a lot of hair on the American exceptionalism story, and we've been talking to people about it for the past couple of weeks, about the concerns, the lack of certainties, and yet when you ask them, they still say they prefer to invest in the U.S. over the rest of the world. If Europe went through with a 900 billion euro spending package on defense and infrastructure, would that shift for you? Would you see brighter
growth prospects in Europe?
So what happens, Mohammed, if this American exceptionalism story is challenged to the degree that you're laying out, and a lot of people are worried about, but there isn't a brighter alternative in Europe?
That's the concern, because remember, I've always said the good and the bad and the ugly of the global economy. The good is the US, the bad is China, and the ugly is Europe. And if you don't see China and Europe converge up to the US, there's a risk that the US will converge down to the other two. It is a risk scenario. It is not the baseline, I want to stress. But in mid-January, no one was questioning US economic exceptionalism. And now, as you point out, a lot more people are starting to worry about it.
Mohammed, what do you make of the tariffs? Do you think they're actually going to come on tomorrow, or do you think the market consensus of that maybe China, of course, goes on, but there will be a pause, another pause or a pass when it comes to Canada and Mexico is the accurate way to view this?
I don't know, Anne-Marie. I really don't know. I don't think anybody knows but the president. But what has become clear is that there are three sets of tariffs. And that explains why the president was pursuing so many objectives with tariffs. You know, when he came out in October when he said it's my favorite word. He said it can raise revenue, it can result in fairer trade, it can put pressure on both adversaries and allies, and in addition, it can protect U.S. industry. And the initial reaction of the economists was too many objectives for a single tool. But we're seeing now what is happening. You have a set of general tariffs that do the revenue side and the reciprocity side, the fair trade side. You have a set of sector-specific tariff. It's really tough. Stagflation is the nightmare of policymakers, and it is the nightmare of a Fed with a dual mandate, as you point out. So it's really tough. I worry, like you had in the introduction, that we've had a reactionary Fed. So the Fed is not going to be getting ahead of this anytime soon. I hope it understands it, but it's not going to be getting ahead of it anytime soon. So the risk is, John, that monetary policy continues to amplify volatility rather than acting as an anchor of stability. That's the risk we face right now.
Mohammed, can you just give us a sense of the trajectory of your belief that the economy can withstand all of this in the United States as the year has progressed? And I realize that it's the beginning of March, but how much more worried are you now than, say, 2 weeks ago about a real calling into question of American exceptionalism and a real rolling over of the U.S. economy?
You know, it's my nature. I've been worried for a while. I put out an FT op-ed on February 14th, saying be careful that slowly we may see the erosion of U.S. economic exceptionalism, and that's bad news for everybody, not just the U.S., for everybody. So I've been worried for a while, and I've seen sort of three elements that have made me worry. One is the way business is reacting to all these policy changes, which increasingly is wait and see. We think it's going to be fine, but let's wait and see. Second, we know that the lower segments of the household income distribution is under enormous pressure, and that has been a concern for a while. And then the third issue is the risk of a Fed policy mistake. So these things have been there, and now that
to unravel so many layers of regulation and policies to even get down to something that is pro-growth, that it becomes something that is so onerous they cannot respond with the liveness that so many people were hoping for.
And how much does Ursula von der Leyen, she's speaking right now, need to give to the auto industry if they are facing potentially a harder market when it comes to dealing with the United States? They're going to need to use some other levers to make it acceptable and easier for autos to produce and thrive on the continent.
They've been crushing their own economies and killing their own businesses, and we've seen that repeatedly. Talked to Guy Johnson a few times about this in the past, how expensive it is to start a business in Germany because of what? The cost of energy. It's a major part of this story.
So you put all these things together, including ossified policies that have been in place for decades. How do you get to a pro-growth place? We're talking about potentially car makers getting leeway to reaching 2025 CO2 targets at a time when they also need something to generate growth to compete with China.
For decades, Germany was able to produce and have a manufacturing base as good as they had it because of the cheap Russian energy they were importing. Once that shifted, you can tell they were really out of alignment in terms of their manufacturing base and how much more costly it was to produce these products. And they're basically have to recognize all of this now.
We're hearing from Germany's election winner. The United States is putting enormous pressure on Europe to act. We should seek a defense deal before Thursday's EU summit. Those headlines crossing just moments ago. Equity futures right now for Thursday's EU summit. Those headlines crossing just moments ago. Equity futures right now in the S&P positive by 0.6% with an update on stories elsewhere. Here's your Bloomberg brief with Danny Berger. Hey, Danny.
Hey, John. Elsewhere in Europe, France and Britain are proposing a partial one-month truce between Ukraine and Russia, that according to President Emmanuel Macron, won Best Picture at the Academy Awards. Filmmaker Sean Baker won for directing, film editing, and Best Original Screenplay. And Mikey Madison won Best Actress for her starring role. Adrian Brody was named top actor for his role in The Brutalist. And that's your brief, John.
Danny, thank you. And I haven't watched any of those movies. Have you?
I have not watched any of those movies either. And to be honest, last night I was looking at markets, so.
Could not care less about the Oscars anymore. All right, up next on the program, facing the tariff deadline.
There are going to be tariffs on Tuesday on Mexico and Canada. Exactly what they're going to be, I'm going to leave that for the president to decide.
Jesus of Morgan Stanley joins us next from New York. This is Bloomberg.
Shouldn't be partisan.
The transaction.
Really a record-breaking moment.
Crypto VC is back.
And the transaction.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Mid-session highs here on the equity market on the S&P 500, positive by 0.5%. Under surveillance this morning, facing the tariff deadline.
There are going to be tariffs on Tuesday on Mexico and Canada. Exactly what they're going to be, I'm going to leave that for the president to decide. This president is totally focused on building America back, and we're going to use tariffs to create fairness. We need fairness, and we need the strength of Donald Trump to make the world reasonable to America and stop picking us off. It's over. Donald Trump's going to end it and make the world trade fairly with America, finally.
The Trump administration preparing to implement 25% tariffs on Canada and Mexico and an additional 10% levy on Chinese imports tomorrow. Bloomberg's Tyler Kendall joins us from the White House with more. Tyler, I'm going to ask you, do we have a clue what's coming in the next 24 hours?
Well, John, we have to keep in mind that this specific batch of tariff threats are tied directly to some tangible policy priorities for this White House when it comes to immigration and fentanyl. A White House official confirms to Bloomberg News that President Trump is tracking overdose deaths as a metric of progress when it comes to this, although when asked last week...
There are going to be tariffs on Tuesday on Mexico and Canada. Exactly what they are, we're going to leave that for the president and his team to negotiate. I'm going to ask you a dangerous question. What's your base case?
The base case is that we think these tariffs will be pushed off. I think there's more common ground with Mexico and Canada than for China, for example. So we do expect the China tranche will go on. But if I pull back for a second, I think our base case, when we're talking to clients, differs a little bit from others. But where there's common ground is that everyone expects tariffs will go higher. And by the way, I think that consensus is right. So in the fullness of time, we're still dealing with the U.S. that's going to raise more tariff barriers. And whether or not you agree with the goal, the ultimate goal of what that's going to achieve, and whether or not that's beneficial over the long term in terms of reindustrializing the U.S., for example, it comes at a cost. So we're really kind of focused on the growth pressure that creates over the next year or two. I think there's some important read-throughs for investors there.
Michael, how much is this about China in the end anyway? Scott Bessent on Friday told Bloomberg TV, the Treasury Secretary, that how amazing would it be if Mexico and Canada both imposed their own tariffs on China to have one fortress North America?
Yeah, I mean, I think there is a common goal here around China. It's hard to know that it's specifically all about China as opposed to there not being specific goals with Mexico and Canada. But I think it's clear from both Trump's first term and everything that's been said by his advisor since that term that there are far greater conflicts of interest between the U.S. and China in how that trade relationship progresses, both in terms of the magnitude of the trade deficit, but also how the U.S. wants China to operate in terms of a free trade arrangement that We really don't think China's going to be willing to make a lot of those concessions. In a lot of ways, it's anathema to how they manage their political economy.
So say your base case is accurate. The 25% on...
They asked for in the first Trump administration were really just anathema to how China wants to manage its economy. So the U.S. probably has to raise tariffs along the way in an attempt to negotiate, but they ultimately stay higher. I think that differs in a way from what they are likely to get out of Mexico and Canada in the fullness of time, which is a lot more cooperation.
I want to pick up on something you said, which is implicitly increased costs as there is a more rapid deglobalization. How are companies preparing for that? Where are they moving production? How much are they trying to actually bring production back to the U.S.?
So